been pretty choppy, but was
Yes,
basically
sir.
on Spaces. I was on Spaces from the open until 1:30.
So
Uh,
last night at like 11:30 p.m. to like 2 a.m. The mini crew of me, Sim, Trader, and everybody else, we were doing future tradings online.
oh, nice. How
So
was it?
we had a space for 2 or 3 hours. Yeah, we made good money on some longs and shorts. I went to bed when my longs, woke up and closed them. Other than that, I've done nothing. It's literally absolutely
Got
nothing.
you. I haven't really traded futures before personally. It's basically like a more leveraged version from what I've seen.
Yeah, I mean, so like you can trade NQ, MNQ, if you want to bring down your risk portfolio because NQ is pretty large compared to ES. I trade the minis because the large ones, for every point move, it's like a $50 gain or loss to your account. So for a small account, that can go upside down very fast. Um, so I trade the minis. So it's like I risk either $1 or $3 for every point NQ moves in my favor or against me.
Got it. Okay. Yeah, it's a little bit of a different system there than what I'm typically used
Yeah,
to. But I think it's pretty interesting, and I've seen people have success with it, especially when they're scalping.
yeah, and the best part is no theta, no nothing. So if you can set your stop loss, you can set your take profit, you can go to bed, you can wake up, you can hold it for 2 days, 3 days, well, whatever, as long as your portfolio can take the hit. Don't have to worry about any Greeks. When you do get a run up or a run down or a gap up or gap down overnight, you take advantage of it. It's kind of it's got its perks. News events
Got
news
you.
events are great at 8:30 a.m. so you can just play those very well.
And some tax benefits as well,
Yeah,
right?
60% of your profit is taxed as short-term gains, 40% is as long-term.
Okay. Sounds good. That's pretty interesting style there. What's up, Andrew?
What's going on, guys? I'm pumped for Power Hour. How are you guys doing?
I'm definitely enjoying it. I mean, it's been a good day. Been live for all the day in the market except the last hour and a half. Was live from the open until 1:30. We were looking at a few different pieces. I would say during that time, mostly the Qs, because there was a lot of movement there, but also a little bit of Tesla, a little bit of Facebook, um, and maybe one or two other plays. How about you?
So far for me today, my big trade has been adding to my position at HPQ. And it's a name I added a starter position in this one, maybe like 2 or 3 trading sessions ago. And it's a Warren Buffett name, which I love, and it's getting very close to a breakout on the weekly chart. So on this morning's dip, I was looking for something to add, and I was like, you know what, HPQ, I've been waiting on this thing. So yeah, I loaded up on that one. And then other than that, just making some minor adjustments in the portfolio and just trying not to go crazy over trading, honestly.
Okay. Yeah, I mean, that makes sense. What's your risk model at right now?
Right now I'm at a +3, and I continue to see these dark pool buyers. They're just coming in for the market. And we saw this morning, like this morning was the real test. Like, could we fall out of this 5-day range? And I was prepared for a contingency plan in place just in case. But yeah, the dip buyers, like literally at 9:30, there was just like a huge 5-minute candle on really nice volume. And yeah, the dip buyers, they just emerged right away.
Yeah,
Damn. Yeah.
it's funny you say that because we were long in the morning at 9:35. And it's funny you say HPQ. I actually had puts on that just because a dividend payout was today. So I'm glad you're positioning into it because I closed all those out today. I had 39 puts. I sold at 38.10.
Nice. Gerg, what have you been up to?
Yeah, what's up? I did trade Amazon in the morning and Facebook calls, but apart from that, I did buy some a stake into some energy company today. They have, I would say, branches in oil and nat gas. I can't talk about that, but I will send you a DM about that Wolf, if you want to take a stake in that too.
I think I know what it is.
Yeah, did you see in this call?
It's a 3-letter ticker.
Yeah, that's the one.
Cool.
Can I
Yeah,
get information on it or no?
I
Sure.
I have heard about that. I saw there
Bro,
was
bro, pull up the chart for that.
there was
That's
flow in it last week.
no comments.
Okay, let me see. All right,
Bro, look at the chart. The zoom out on the 1 year.
why is my thing being so weird? It's not finding it. Is this?
It's on the it's not on the U.S. exchanges. It's on Canada. So, but if
That's
you go
why.
on like Webull or IBKR, you should be able to find that name easily.
Okay, interesting. I mean, I'm just gonna probably be able to pull it up on Google.
Yeah, Google should be there.
Okay.
It makes you happy. That ticker makes you happy, right?
Ooh, that is a pretty nice looking year-to-date chart.
How much is it up?
Year-to-date, 165%.
And on the 1 year?
What is it, like 600%? Let me see. 670%. Yeah. I mean, it was trading at $1 for a while there.
Bro, I mean, the numbers are just insane. Like, I looked into them in detail for the first time over the weekend. They can buy back the entire company in the next 18 months from the free cash flow, assuming the prices stay at this level for nat gas and oil.
Interesting. I'm trying to look into a couple articles on them right now. So you like the fundamentals a lot.
Yeah.
This is on TSE. What's that?
TSE, yeah. It
TSDR.
does, yeah. It does also, I think, on OTC in the US, but it's just on the Canadian exchange. A lot of these big Canadian names that trade on the TSX and TSE don't trade on the NYSE Nasdaq. They trade on OTC. It's the same as SPRUUF. I own a bit of that too. That's the uranium ETF.
So
That's,
I could probably
yeah.
they probably have it on like E-Trade is where I usually trade OTCs.
Yeah, so that's SRUUF for I think US. But if you live in Canada, you can just buy U or U.U. It's a uranium trust. They just buy and hold uranium.
Wow, I don't even have it on E-Trade.
No,
Interesting.
SSR.
No, I'm talking about the other one. The other one.
Okay.
It's not even on E-Trade.
The stickers one, right? The 3-letter
Yeah.
happy
Yeah.
one.
Yeah, it's not even on E-Trade. Very interesting. Okay.
Did you find it on Google though?
Yeah, I found it on Google. I mean, I see the
Okay.
chart. Chart looks good. I just don't know where I would buy it because it doesn't look like I can trade
Yeah,
in E-Trade, Fidelity,
Wolf,
Robinhood.
I think you should move to FTX or IBKR to buy stocks.
FTX, is their stock thing open yet?
Wait, I can probably check if it's on Webull. You don't have Webull?
It is on Webull, but you can't trade OTCs.
Bruh, I just got like 3 messages
maybe
from
I can trade on. Wait, OTC trading is coming to Webull. I got a notification.
No,
to be beta
but they
tested.
only added 50 of the largest cap names. They
okay.
added
Yeah.
Porsche, they added Nintendo, they added Volkswagen, correct, Wolf?
They added what? What was the last thing?
No, on Webull they added some OTC names, but just the top 50 names. About 5 billion. So this is
Stock Talk's pulling a Gerg in my DMs. I'm getting all capital messages from Stock Talk. He said all caps. Guess where I am? All caps. Bank of fucking America. All caps. If you want to say something on the space on my behalf, say Stock Talk Weekly says short Bank America for gross incompetence.
No, so, I mean I was talking to him. I was still pissed from yesterday. Did you talk to him about what happened with them?
He just told me he was there all day.
No, nothing. Yesterday, someone stole money from his account, and he called them, and they said, "Call them, call that," and he spent 5-6 hours with them. And now it's like, I have to go take a shower, get ready to go to their head office. I'm like, what? Time to go long back to America, guys.
Yeah, there you go long. What's up, Vegas?
Hey guys, I'm in AMC. $13 calls for next week. Paid 99 cents. They're at $1.11 right now. So looking for some action on AMC. Looking for the squeeze actually. And I think if we break 13.75, we'll see some serious fireworks on AMC. So that's looking really hot and really liking that one. Netflix looks good. GameStop's super fiery too. Looks like a squeeze on these mem stocks. So GameStop, Also have GameStop in play. On the 150s, I have the 150 weeklies. And also, just seeing the action across the board. I mean, a lot of different, so many things you could want to jump in, but, just can't be in all of them. But those two look really exciting. And Home Depot's lighting up, Netflix is lighting up. So a lot of action. But one of my trades that I loved so much today was AERC. Float rotation, huge move, and it's pulled back here just a little bit under $10, but I won't be surprised to see this reclaim 10 and try to make some new highs. So that's a good one. And long on AUVI from courtesy of Trade Ideas on that one. So really liking that. And uranium plays are hot too. So you're seeing a lot of action on uranium too, like CCJ. That's pretty hot today too. And all the oil plays like Oxy, ExxonMobil, Chevron, all the oil is hot. So lots of action here. So hope everyone's having a good day today.
Yeah, oil definitely been grinding it out today. I was looking at this morning at MRO. I think that they were up a couple of percent when I was watching. Looks like they've trended a little bit higher here today. And then Oxy, Chevron, all the classics. It's just trying to find like the one that's gonna, be able to sustain. Pretty interesting right now. If you look at the 1 week on Oxy, it's exactly flat. It's up 4 cents. And it's just like oil has just been kind of barcoding here to the side. And is it, are we forming that little flag before this next leg up? Certainly looks like a nice technical pattern.
Yeah, that one looks good. And you know what? Lockheed Martin is looking really good. Lockheed Martin has a breakout, and that one looks really hot for a nice move on swing trade, but not for July, not for June, but for July on Lockheed Martin. That one looks really nice for future activity to the upside as well. So won't be surprised to see Lockheed Martin go maybe towards 465-ish, like a $10 move or something like that, but looks amazing. So looks really good. Some good action today. Really happy today with the market.
Wolf, is that Stock Dogs Burner in the audience requesting to come up? I think it's him.
Stock Talks Burner?
I think it's him though, right?
Stock Market News is Stock Talks Burner? Or the other one?
No, the other one with the picture with the weird name.
Do you know who they are?
I have no clue. That's the funny part.
Stock Talk always thinks that it's you.
I mean, how can I request?
No, I don't think that it's you. But I always thought it was pretty funny.
Damn, you kid Gav?
No, I just moved it to give posts.
I'm like Gav. Gav.
Yeah, definitely. Had to kick the. Wait, are you just removing people?
I did not remove anyone.
All right.
I did not kick you, Gav. TSDR is there too.
I'm trying to get TSDR up here.
Yo, TSDR, get your ass up here.
What's up, Evan?
He's laughing. Look at him playing games. TSDR.
Yeah. What's up, dude? How we doing?
Evan, you sound cranky. All good?
Appreciate it, Kirk. Nah, I'm just chilling. I'm a little tired.
Okay.
Doing some work.
So, as the news guy, are you following up with Shopify? The news just came out.
10-for-1 stock split. Breaking news from 5 hours ago.
No.
What happens?
The new one. So the Shopify shareholders have agreed to give the CEO a 40% voting stake,
Which is
voting
the
control.
stock split.
No. I mean, this came after that.
No, it's a part of it. The stock split is a part of the stock split. It changed the share structure, and he would get that.
Yeah, and before they had, I think, 2 classes, though, right? Now they only want 1.
I have no idea.
Yeah. The stock was actually down, I think, 5% pre-market, and now it's up, I think, how much? 5%, so. No, it just came out from Reuters.
Yeah, I mean, was there anything else interesting that came out today? I haven't seen a lot of news today. It feels slow.
So there was some news about uranium, though, about the government buying from the U.S.
What's your favorite uranium play?
SREUF. They just buy and hold uranium.
What's the market cap?
No. It does not matter, though.
Okay.
Like, it's a spot ETF, though, right? It's not the company. Like when you
Okay.
put in money, when you build more units of that, they go out, buy uranium, and store it. So it's like buying gold ETF, right? When you buy GLD, what happens? They have 1-to-1 gold in the reserves for that. Same thing with this.
Got it.
Yeah.
There was actually a
You
couple
own.
stories today, honestly.
Okay.
PayPal, they announced that you can now send your crypto to other wallets. So that's interesting. We also had Uber Freight and Google's Waymo announcing a partnership to kind of use Waymo on Uber to kind of put it at scale on the Uber Freight network. The Shopify stock split, as we were talking about, was also pretty large in size. I thought Raytheon changing their headquarters to Arlington, Virginia, very fitting for a company fighting for government contracts, but that makes sense. See, Tesla, China is reportedly not cutting jobs at all. They're still looking to expand their job pool. So those job cuts that were rumored or talked about, I don't even know if rumored is the right word for it, but were talked about are not going to be hitting China. And then also there were some things out of the European Union. I don't know if this is like the first time we've seen this or whatever, but in the European Union, you will have to be using USB Type-C for chargers for mobile phones starting autumn 2024. So it means Apple in the EU will have to at least be having USB-C. So we'll see how that goes. Maybe it sets it as a premium. And also I'm seeing the law firm that so Johnny Depp's attorney, Camille Vasquez, was promoted to partner. So that also happened. Breaking. It's funny was also that there's this thing called Court TV, and they announced that they had record-breaking numbers for that trial of live viewers. They had like 500,000 concurrent viewers. They maxed out at like 530,000 or something for the verdict.
Oh, wow, yeah, and then this price action is just wild. I think there's been a pretty clear change in character over the past couple of weeks, and it's pretty funny. I believe it was like yesterday. It was either yesterday or the other day that Cardi B called out the imminent recession in the U.S. economy, and I definitely noticed like over the past like 2 or 3 weeks, really like as the market was hitting the lows, like I started noticing everyone was like recession, recession, recession. Like everyone on Twitter, like I was starting to get messages like from my sister about like a recession and all this stuff. And now as I look at how the markets are trading, I've noticed over the past like 2 or 3 weeks, the small cap stocks, they're actually leading us to the upside. And that's usually what happens as you're coming out of a recession. So like we may very well be in like this economic like malaise or whatever it is. But I think the stock market is already kind of like looking ahead of it, just as like, the crowd and like the celebrities, they're all kind of like, calling it out. It's super interesting.
All right, good.
It's funny you say that, Andrew, because you remember that whole phase that all the celebrities went through with getting on the crypto wave with those ads from Tom Brady and everybody else, and we all know where crypto went after that.
Dude, yes, 100%. Yeah, they're almost like a contrarian indicator. Like once the celebrities hop onto the trend, then it's sort of getting long in the tooth. It's wild.
Okay, perfect. I see we have some more people joining us. All right, well, this account came up. So Gergovitis. Well, they're gone. Thanks, Gerg. All right, Sim, what's going on?
Bro, I brought them up. I wanted to hear them and they just left.
Yeah, I don't think they want to be in there.
Wait,
what's up, Sim?
Yo, what's up, guys?
What's up?
I had to come in on this account because I hurt Gavin's feelings. I told him he doesn't know how to shoot a firearm. But what the Canadians know, right? So, anyways, I'm watching SPX here for some.
Bro.
Yo,
Gerg,
what's
stop.
up? What's up,
Gerg,
Stocks?
Gerg, don't do this. Don't make me take you as co-host, please.
Oh, you kick Sim? Come on, bro.
Yeah, whatever,
Yeah,
man.
come on, bro. Come on, bro.
Dude, we're here to
Do
trade.
not be kicking her off.
Yeah.
We're here to trade, all right? But unless Gavin's gonna call out a bounce on this GME or SPX, let me know if you guys want this trade.
I would like it.
Sim, go ahead. I'd like to
All
hear
right, bet. So looking at GME here, sitting in a little bit of a pennant, might break out here above this 145.6 area. Got some decent volume that came in here end of day. And also looking at SPY as well, for a little breakout above this 415 level. We rejected there pretty hard, as you could see, about a good like around 11:40 my time. So 20 minutes prior to power hour, we rejected really hard. I thought we would break out over that flag. We did, only to reject off of 415. I think we may see another rejection here. We're kind of trading on like shitty volume. I consider this end of day shitty volume. We're getting a back and forth movement in about a 35-cent range. Really need to see a break above 415 for some confirmation, but I don't know if we'll get that by the end of the day. Again, volume's just not there. But looking at GME right now, and I'm going to be taking it off of a flag break. I like the 145 calls for GME. Friday's expiration is what I'm looking at for that. I want to see if we confirm here and see some more volume come in. The volume died off on this last 5-minute candle, so let's see if we get some volume, and then I'll call entry.
Yo, ever a new account a lot?
No, this is an old one. Sim just said burner, so I went on my burner.
Bro, I see Dave Fortnite follows you here.
He does. That's the only reason I didn't stop it earlier.
Does he follow your main account now?
No, he doesn't. This is the only account Fortnite follows, and I have slid in the DMs once or twice.
Did you get a reply?
Of course not. Absolutely nothing. Maybe it's time to shoot one again.
I mean, bro, I see these tweets. Maybe if you tweet about them. But is Buzz still there, though?
Dude, I have no idea. I kind of just stopped. Look how long the last Buzz post was.
Bro,
No one
the
picked
buzz,
up.
bro, no. To be honest, the buzz about Buzz died.
The buzz about Buzz never gets started.
I mean,
But hey, it did. It happened in Market Madness, and then it died in Market Madness, and that was the end of
That
it.
is wild.
It went to the finals. It went to the finals of Market Madness, and nobody ever heard about it again.
bro, but the volume when it came out was pretty good, though. I would say it was over 10 million for the entire month. Do you guys remember that?
Yeah, dude. I was tracking
But
the
back
holdings.
then they had the DDoG, right? What was that name? I forgot.
DDTG.
Dave Portnoy, yeah, Day Trader Global. But that was big though on Twitter. I would say every morning you had over 100,000 people tune in to watch him live trade and lose money.
It wasn't 100,000, but it was nice. It was nice. They were big.
I mean, close. Yeah, I mean, like I remember that AMC GME, like Bitcoin, I think the day he bought Bitcoin, it was the top, and the day he sold, the market reversed by 10%. Do you guys remember that?
Remember when he bought SafeMoon?
Yeah, I mean, even with that, SafeMoon's on how much, like 90% now or more?
That's old reliable tweet.
Since he pledged Alliance, that's what he said, right? I'm gonna pledge Alliance to one of these shitcoins.
And then he picked SafeMoon. Yep, good times.
No, did you watch the video, the cap one with all the shitcoins and that?
I did. Yeah, I watched most of the Portnoy stuff. It's interesting. I'm just hoping that the Boston Celtics lose the NBA Finals so that we can see him have a full meltdown. Speaking of which, coming up in 2 hours.
Yeah, that went by.
Yeah. All right. Wait. Let's bring it back to Power Hour for a second. I just want to see real quick any of the trades that are being done. I want to get some trades in here, and then we can also. I see we have a person that came up and requested, so we'll go to them in a second. Vegas, Andrew, Sim, anything else you guys are trading?
Yeah, I said I'm trading AMC $13 calls for June 17, paid 99 cents. I mentioned them on here at 113. And also I traded HUSA $5 calls earlier, so I'm not going to, there's no point in taking those at this point. They've ran over 100%. But AMC's fresh, and like GameStop as well. So I think there's going to be some squeezing going on. And it's pretty much the ones that, that are still haven't made their moves yet. I mean, AMC's just starting, in my opinion. If it can get over 1375, maybe tomorrow, maybe some serious fireworks on AMC.
What's it up today?
It's up about 105, about 8% today.
Okay, so, got it.
Yeah, it was 1181 was the low, high of day 1312. So it's up $1.07 on the day. So, but not bad. I mean, I'm looking for the squeeze, so I'm not looking to day trade this. I'm swinging it. And yeah, you guys know I got Nile. So pretty much what I'm trading right now. And I have an IWM call open as well. 189 calls for tomorrow. Those are still active. Looking for
Nice.
some movement there as well. Yeah.
Okay. Yeah, I mean, I hear it. Just continuing to play the bounces off the bottom for AMC. Also, shout out Neo. Looking interesting on the daily chart, I will say. Kind of trying to make it's got to get back up above 20, 24 and a half is what I feel like, which is still a bit of a ways off.
I'm just wondering if maybe, it's not making the move just yet because earnings are coming. So maybe, the traders that might be interested want earnings to be out of the way. And then once they get the guidance, they'll be like, oh, I'm in now, so maybe we'll see fireworks after guidance if it turns out that it's good.
Sounds good. Yeah, I mean, the anchored VWAP, the year-to-date anchored VWAP is a little bit closer. It's like 20 and a half. So maybe if it just gets a dollar pump here, it could come through that and see some nice movement on, the people that are more on a year-to-date basis. All right, let's see what else.
Oh,
Sim.
can I just comment
yep.
one last thing? Was about some oil plays, just really quick. I have a swing trade on ExxonMobil and also for Chevron CVX. And so long on those ones, those triggered. I did take July though, because June next week's already June 17. And so I'm expecting some pretty good move, in particular on ExxonMobil and on Chevron. Not as big a move, but Exxon looks like it's ready to have a nice move. It's currently trading. What's it at right now? It's at 103.19, almost a high day break, 103.25. So I think Exxon is heading towards 107.50 and then maybe 110. So that's why I took a July monthly contracts for ExxonMobil. And also Chevron, have some monthlies as well for Chevron. 185 calls in particular for Chevron for July. And for Exxon, I have 105 and 110s for July 15. And so those are my favorite oil plays for now. They're not my favorites at the pump. I don't want to pay the price at the pump, but I'm my favorite to swing trade.
Okay. Yeah, very interesting. Appreciate you sharing that. I know I did send over the DM and was kind of chatting about oil plays. So good to have some insight there. Sim, any other moves being made on that GME play?
No, the volume had just kind of died off. Momentum to the upside kind of died off too. I was able to take SPY for a little 20% scalp. I really need to break over this 415 and then see if we could retrace this 414.7-ish area where I saw some of the demand come in. So really want to see what happens here. I mean, we could either see a double top and then see some downside and then end up getting smacked on it, or we get that nice break above and then we see some room to 415.8. But again, just kind of waiting. I also like Amazon. Amazon's sitting in a nice little flag right now too. But it hasn't been as strong as I thought it would be all day today. I thought it would roll with the Qs pretty hard today, and it didn't. I'm watching Shop for a potential swing. I know that they talk about that stock split that they're going to be having in the month, so I really want to play the run up, maybe a couple weeks out. But as of now, just for a day trade or for a scalp trade, watching SPY, watching SPX. Want to see if we break that 415 of SPY and then get that retracement. And it looks like it might happen here. The volume's picking up right now as well.
Okay, perfect. All right, Mad Scientist, did you have a question you want to throw out here?
Yeah. So I've been looking at Facebook for a while now, and it hasn't moved. I'm waiting for a break, and I'm trying to get any ideas. Is it up? Is it down?
Yeah, Andrew, you want to comment on that?
Oh yeah, you're asking about Facebook?
Yeah.
See, let's pull that one up. Facebook out of all the FANG names, this one, it just honestly looks like it's going sideways. Like the S&P 500, it's up 0.71% today. Facebook is only up 0.21% today. To be honest, I'm not really looking at Facebook. The name that I am watching, surprisingly, this name has been horrible for a while, but Apple is doing something a little bit different. So today, heading into the close, I'm probably not going to add anything because over the past couple of days, the move has really been sell a little bit into strength and buy the weakness. But I am very tempted to buy Apple. If we get any sort of morning dip tomorrow, that'll probably be on the top of my list. And the reason why is because this name has come off the lows. And as I look at my heat map, out of all these FANG stocks, Apple's actually outperforming today. So like for the S&P 500, it's honestly looking like the way this is shaping up is like we had a nice move off the lows. Now we're just making this beautiful sideways movement. Assuming we don't just get like a horrible inflation number, it looks like the S&P 500 wants to test the 50-day simple moving average. And I think if we do get that test of the 50-day, Apple makes up about 6.5% of the S&P 500. Now that it's actually showing some nice strength, I am looking to add a position in Apple, probably in like some swing calls or something like that. Yeah, it definitely looks a little bit different today.
Anybody else want to touch on Facebook?
Yeah, I just want to comment to Andrew, like a lot of money flow from a dark pool perspective as well came on Facebook last week. And so I'm not in any Facebook contracts at all, but I am watching this level that I will take a position for a swing if it breaks 200. So I have an alert set over $200. That'll be a confirmation that I would like to go long on Facebook. And regarding Apple, I definitely love everything you just said, and looking to go long on Apple if it breaks 150. I think a lot of traders are watching this 150 level. There's been a lot of money flow too on Apple last week too. So those are the two levels that are really key breaks to actually get confirmation to probably want to take a swing trade or to go long on it. So Facebook 200, Apple 150, and then I'll be very comfortable going long on them.
Okay. Hopefully that was some helpful information in regards to Facebook. Any other questions about Scientist?
No, that's the only one I'm looking at. And some things on Apple. I have that contract 150 on Apple. It's doing well today.
Hey, Nancy did buy Apple calls. That's all I'm saying.
She
Oh my
bought the
God,
bottom,
that's
guys.
right.
She bought calls the bottom again, guys. Come on.
What did
bought it
she
like
pick up?
weeks
She got
ago.
Apple and which
I
other
mean,
one did you get?
she
She got
bought,
Microsoft?
yeah,
Microsoft.
she bought Teams in
Microsoft,
the
like 3
money,
weeks ago.
Microsoft and Apple calls. Yo, everyone, did you see the date was wrong on that?
What do you mean? It says the 24th and the 13th.
No. The notified it. Like the date
Yeah.
of notification was way wrong.
No, so I don't know if like when they notify it in and when we see it might be different. So it might have just taken the 2 weeks, but it came out on the 6th.
Yesterday though, right?
Yeah, that's yesterday.
Yeah.
It came out yesterday. The dates say whatever. And
Okay.
listen, why does it say that date and we got it yesterday? I am not the guy to ask. But
Yep.
wait, Greg, you're gonna post some of the lineup. Hey, Greg, I have a question. Where did you see the trades first?
Someone tweeted about this. I don't know. I don't remember.
I'm cool with it.
But the watermark is awesome. Congratstrading.com.
Yeah, Congress Trading, good account. Honestly, Greg, you should follow them. It's a good account.
I pay for them like $9 a month, $10
you
a
do?
month. Whatever
Yeah,
they
so
charge.
there's a couple people that give out the information.
Wait, who?
But they kind of Congress Trading. We've had them on one of the spaces
No. I
before.
think Wolfman to say who cares, right?
No,
Really?
I think I do remember them.
Yeah, so they kind of write at the bottom, like the description, like they purchased 100 call options with striking. They add that in. That's not just there. So,
No, and they have Google Drive too.
yeah, it's pretty cool.
No, do they do that or does it come from the back like that?
I don't know. All I know is good follow.
They have a pretty good database, and yeah. I do see some more from here. I see Loyal. No, okay. If you go on their database, it's not there. This is weird. No, it is there. My bad. Okay. This is weird though. Evan, are you there on the website?
I have not even used their website now. I just kind of use the Twitter account.
Okay. Bro, they charge like $8, so I think it's worth it though.
Yeah,
Like,
dude. I mean, you get that first. You get a good tweet out of it too.
I don't think I've ever. I just see the
Gerg,
Twitter. I just take it from there.
you see the NVIDIA Intel news?
Which one?
There's some news about NVIDIA and Intel just now.
Oh, is Nvidia trying
NVIDIA
for?
taps Intel's Sapphire Rapid CPUs for Hopper-powered DGX H100. The Register report.
Is Nvidia crying for a plugin from Intel? Guys,
I didn't really hear what you said. I'm just kind of looking at this.
I think Nvidia is begging for help from Intel again. Looks like it.
Let's move on.
This Tesla 720 level's been real interesting all day.
Sorry, I was going back and forth there. What's so interesting about it, TSDR?
Everything. No, we've just been, like I said, it's not necessarily a picture perfect level like 720 on the nuts, but more of a zone of love. So I'd say about like between 719.50 and 720, give or take a few pennies, is just a solid wall. I think if we break above that, we could probably see 727 real quick. I've been in some Tesla calls most of the afternoon session. That's about it.
720 on the nuts.
Yeah, on the dot. Sorry, that's probably more professional.
Yo, Evan, how's the news on top?
I can't lie to you. First of all, TSDR, a lot of times when you say the things, I do chuckle in the background. There's been multiple times where I'm with my friends and you'll just say like your end, like just end tagline at the end or just something at the last sentence, and I just laugh out loud. I do love it.
That makes it all worth it. It really does.
I'm still trying to get rid of the fact that TSDR is like 28.
How old do you think I was? Do you think I was old?
Bro, no, you sound younger, bro.
Nah, dude. TSDR.
Bro,
Gerg, you thought TSDR was a lot older.
Oh my god, he has like a whole bunch of kids.
Bro, yeah, he has like 4 kids, so.
TSDR, you sound about 10 years old.
He sounds like he just graduated high
TSDR
school.
got busy at a young age, bro. You got busy at a young age.
Thank you. I'm 28 years young and still thriving.
Yeah. Isn't Stock Talk also 28? Are you guys the same age?
Oh my god, AMC's going. AMC's ripping right now. High day break on AMC. And the squeeze is just starting. We're at 125 now in these contracts. So guys should be green if you took it. It's going. And this AUVI mentioned by Trade Ideas, Wolf, is ripping too to 186. They're saying it could be the next AERC because that one had a beautiful move today. And AUVI, it's at $1.86 right now.
Did you find it on the timeline when they posted about it, or you found it through the platform?
No, when they posted,
tagged you?
yeah, because I was talking about AERC, and then he's like, "This is the next AERC." It has the same setup. So when they mentioned it, I went long on it, and this AERC's had a float rotation today as well, over 106 million shares traded, and it's under 5 million. So I won't be surprised this AERC will break high of day. And now we'll see if AUVI can catch up and go. And as I'm talking, just to let you know before I go on mute again, C for City is ready to trigger for a day trade very late in the day. But if it breaks 52.20, I will take a $52 call that expires Friday for a scalp, and I'll close it before 4. But it'll be the June 10 52 calls. If it breaks 52.20, I will take it. So it's almost ready. Just to let you know.
Wow, you're right. They did call out AU. I see 2 different ones. I see, AUVI. They did call that out. I see about around 18-20 minutes ago. Maybe they put it out even earlier, but it's already up like 20%.
Yeah, it's still lots of room on that one. It's looking really nice.
No option chain though, just comments.
Yeah, I always check options with these penny stocks, but that one has no options at all, unfortunately.
Mm-hmm. Interesting. Okay. Big play. James, what's up?
Hey, thanks, Wolf, and thanks for hosting the space. quick question from a technical standpoint. How do you guys like LNTH and CYTK?
LNTH.
Trash. Sorry.
Oh, well, why?
Shit.
Why are you saying that, TSDI?
Because they're crap companies. What are they?
LNTH?
Let me look at them again.
Have you seen this chart?
Yeah, this is not LTHM. I think it makes
This is not LTHM.
Yeah, they're definitely not shitcos.
My bad. What was the last one you said? CYTK?
I'll say this chart doesn't look like shit.
No, that chart looks great. I honestly was thinking about different ones. I thought these were like $3 stocks.
TSD thought LTHM, the stock tag one. He got mad at that.
Hey, James. I apologize. I thought I was thinking of different stocks that I thought were like $2 each one. I apologize. That was rude. I apologize.
No worries, man.
What was the second one after LNTH?
CYTK.
Oh, this one I have heard of. Okay, interesting. I mean, yeah, they look like ideal setups in a market like this, right? You're staying above, majority of your moving averages, but not too far above them. Especially the CYTK, just kind of riding everything, staying above your data anchor VWAP. Not currently at an all-time high, so you have room to come back through. It looks pretty fantastic to me. When I see charts like this in an ecosystem like we're in currently, I love to dig into the fundamentals because you already kind of have the chart set up. I don't know if you're looking at it as like a scalp right here, or if you're trying to do something maybe a swing, because I would look at this as a potential swing just based off the chart. So I would want to know a little bit more about it. Like I don't have the time to look into it just yet, but exactly like where earnings are, what earnings expectations are, if they have any supply chain issues, because it looks like they're dealing with nuclear medicine products. So there's just like a lot of pieces there. That's what I would dig into. But from a charting perspective, you can take a look at it TSR if you'd like, but the charts look pretty great to me.
Yeah, I was looking at both of them for a swing. So LNTH is super interesting. So they just got this AI imaging product approved, and it's the only one of their kind. So it's going to be in like every hospital in the US, maybe in the world. So they've really strong forward earnings, and the stock's actually objectively kind of cheap too if you look at forward growth. Cytokinetics is kind of different altogether. Pretty sure they just got a drug FDA approved that's heart related. I want to say myocarditis. I forget the what it was approved for, but again, should have strong forward growth for that.
For calls right here. I'm an SPX for calls, 4160 calls, today's expiration. I got it at 270. Go ahead. Sorry about that.
That's all I had. But yeah, looking at both for a swing. I've been in and out of LNTH. It's just hard to hold it when I've had that much of a gain.
Yeah, I think that makes sense. Are you
I was looking into this CYTX. It says they make drugs for muscles, correct?
It's CYTK.
Yep, that's the one. It says they make drugs for muscles, activators, and other stuff with muscle impairment. Like they make the fundamentals don't look that great. I think they made 56 million and they were 3 billion. So
yeah, this is basically CYTK is basically an approval play. It's not like LNTH. I actually got it from a cardiologist, so I was just seeing what you guys thought about.
Do you know when is the PDUFA for this? For the approval?
Not off the top of my head, but I can check.
Let me check pdufa.com. Let's see.
Truthfully, this may not be the best thing to say. Maybe I just give up on opportunities. I stay away from pharma and biopharma and this whole area. I don't know.
Most of these pharma names will either go to zero or get bought out for 1/10 the price.
Yeah, that's why, of the two, I definitely like LNTH better. I like the med tech space better. I always have. But, sometimes I'll take a flyer if there's like a reputable doctor that is pretty confident that something's going to get approved. That is also not an insider.
But I would say playing these approvals is almost like a gamble, right? You never know what happens. And the thing about this is, if the stock gets approved, the stock is up 100%. If it doesn't, stock's down 70%. So, and the IV is so high on the options, it's already expected a huge move. So you won't make a lot of money unless you know what's going to happen.
Agreed. It's definitely a binary outcome.
And the only way to know what would happen is to be the doctor on the panel that approves them, right? Because even the company CEOs or the board might not even know. There, I would say 3-4 days before the result comes out. Very hard to say. And I don't see a date for this for some reason. Did you find a date?
I haven't found it. I'm still looking here.
All right, let's see. We got another hand up in the meantime, but great plays. Thanks for throwing them up there. I mean, at least the charts look very interesting.
Yeah, what's up, Matt?
Yeah, I took a 25% so far off of this. Have some runners still. Now 30%.
Yeah, I heard some people talk about some biotech and penny stocks. So I just wanted to ask.
No penny stocks.
Oh man, these are good. These are good sign stocks. You guys want to hear them or no? Just hear me out on this. All right.
Hear them. Why not?
All right, there you go. It's,
what's the market? No, what's the market cap?
I think I don't even know. I just know they're penny stocks. But one of them is ALRN.
1 second, ALRN. What's the market cap? Let's look at the market cap.
All right. Well, let's just stick
let's
only
move
one.
on. Yeah. Okay.
Yeah.
So okay. ALRN. You only have one lifeline. So let's hear about this.
All right, so yeah, I'll tell you about the signs. So the signs there, it's a chemotherapy protector they have designed. They target the P52 inside the cell cycle. So why the P52 is important, it controls cell growth. So by them able to target the cells that don't have that protein P52, they can target cells that are growing out of control, which are most likely cancer cells. That's what I love about them, but I can't read the company. I don't know what the hell the numbers look like.
The numbers look great. But they have no numbers, no revenue, so it's a zero all across the board. So right now they have 45 million.
What part of that looks great?
I mean, I'm being sarcastic, right? Like they have zero in revenue, zero gross profit. Last year they lost 26 million. This year they're guiding to lose 34 million. And they have 45 million in cash. So assuming their burn rate is similar to what they have guided for, they will be out of cash in 13 months. So usually for this, assume a lot of dilution and offerings. So if there is no big events, just wait for it to go even lower. And the stock has no volume. The average daily volume is $50,000. So you can't even buy a stake. Just avoid it. Yeah.
Hey, Gerg, real quick. That PDUFA date's November 30th, 2022. Back in May 8th, 2020, it was granted fast track designation. Just a heads up.
Oh,
and it's for cardiomyopathy, by the way.
So there's a long time to go, though, right, for that right now.
Yeah.
Almost 6 months, so.
Can I tell you the next one? So the next one is
no more penny stocks.
All right.
No.
The next one was good.
Because
you said this was
the
good.
first one, yeah.
Oh, the first one was good too. P52. You look up that protein. It's very important.
I would say best of luck.
Hey,
Okay, thanks.
I'm taking some profit here of 50, 55%, 60%. Shit, this shit's fine.
Damn.
Yeah.
Very nice. Nice little closeout here. We got 10 minutes.
If anybody took it, post up to the top, post some profits.
There we go.
Yeah, that was a beautiful call, and SPY's looking good here. It's gonna go. 416 was that level I have for the day. IWM, just want to comment quickly. Maybe 125. Oh my god, what is that? What is that? Gergaven, are you doing that on purpose?
That's not me. Yeah, Wolf, who was that? Did
Who
you
was
get someone?
that? Mute that person. Yeah,
I did. I took them off the speaker.
Okay,
Okay.
IWM has room to 191.25, so a little bit more room here. And Q's, I was thinking Q's go to 312 today, so might be a little more room on Q's. So those are the levels I'm looking. SPY to me is, if it goes more, it's gravy today. But yeah, Q has room and IWM.
Can you guys
All right. Good.
just review NVIDIA?
Yes, but I can't.
What about Nvidia though? So there
I
was some
can't.
news. Nvidia is begging Intel for help. Other than that, yeah, that's news though, right?
Yeah, so Gergavin had a dream last night, and I guess he's just remembering it now. But in his
Okay,
dream last night,
bro.
NVIDIA came begging Intel for help.
In 3 years, Apple, Nvidia, AMD, Qualcomm, all of them will beg Intel for help for the fabs. Because what TSM does is they don't design their own chips. They use Apple's, Nvidia's, AMD's, and Qualcomm's designs, and they use their own fabs. And with the fabs from Intel, I think Amazon is the first company to sign a big contract. Like Amazon will design the chips, and they will use Intel to make them. So that's what Apple does right now. Apple has great design, but they can't execute because they don't own any fabs. They have to rely on TSM, and that's based out of Taiwan. Even though they have a bunch of other fabs around the world, with the stuff going on in China and with Taiwan, there is a lot of risk. So people want to rely on EU and North American-based companies. I'm not saying China should invade Taiwan, but if China invades Taiwan, it will be very, very bullish for Intel. So basically, Intel is also in hedge against that invasion. Because TSM is, I would say, the most important company based out of Taiwan. Like almost entire world relies on them for chips, especially for the new fab. Intel is doing the same thing right now with their 2.0 fab as a service. So. But Nvidia, even after this, I would say 50% drop, Nvidia is still too damn expensive. I think even if Nvidia drops another 40%, I would be skeptical of that. And if you look at the past of Nvidia's free cash flow getting dropped off, it was in sync with the price of Bitcoin. The last cycle, I think in 2017, which was, I think Bitcoin went down to 60%. Nvidia saw it, I think demand going down after a year. And I
NVIDIA
think
is a different company now than 2017 now. Like
I mean,
that was back then. That was a large part of their demand. They've systematically got rid of
we'll
crypto
see
miners.
about that though, right? Last two times it
We'll
took
see,
around,
but yeah.
last two Bitcoin cycles it took around, I think 12 months for it to show effect on Nvidia's bottom line and affecting their free cash flow by a lot. It was almost down by 70% year over year on quarter basis when the Bitcoin cycle popped. So Bitcoin's down 60% from the high so far, and it's been around 6 months. So I think by Q3 of this year, we will know, is Nvidia a different company right now or not? But like Evan said, they are, I would say, moving away from these mining services. And if I'm not wrong, they also tried to stop people from using it for mining because they limited their, I would say, what's that called, Evan? Yeah, hash rate.
Hash rate.
But now there are so many open source softwares that you can use to get the full potential out of it right now. So I would say before 2 months, you could only use up to 80% of the hash rate from these chips. But due to, I would say, progress in this space, a lot of groups have found, I would say, loopholes to use the entire hash rate. Also, the price of chips for NVIDIA are below the price that they were going for. Like last 2 years, the average price for the chips was over 250% above their selling price right now. People are trying to sell them for below cost, below what they paid for, because the supply is so damn high and the demand is slowing down. The demand is gonna fall off a cliff. So And if my bad, and if Nvidia has one bad quarter, the stock is going to get hammered, like under a souffle.
I don't disagree on the one bad quarter. I do disagree on the demand. I do think we're at a point where
I mean,
there was a time where they were there was a time
Nvidia
for a
is
long
there.
time they were selling
So
for well above what the market price was, and I
in
think we're down now at
yeah,
the market price.
and in the
Yeah, I
last
think
3
we're good to move
years,
on, honestly.
Nvidia raised the price by 80%. At the same time, the competitors only went up by 20% on the base model. So I would say if there is, I would say, a recession and your spending power goes down, stuff like these, I would say, extremely powerful chips will be the first one you cut your spending on. So
Yeah, but I do think there's room there to bring the price down, and at the end of the day,
I
for a
mean,
little
that's
bit
gonna
it
hurt
might be
the,
like
that's
that.
gonna
I
that's gonna
know,
hurt their
but
margins
that's more of
now.
a short-term thing. My
But
worry is,
yeah.
as a long-term investor here, is Nvidia getting more market share. The pie is growing. Are we continuing to not just only get a larger piece in general, because the pie is growing, but growing that market share? So I hear you, and I'm not saying the price won't go down, and I might get a buying opportunity, but I do still look at that from the long term as a buying opportunity if Nvidia still is strengthening its market share.
I mean, Nvidia is a good company, a good team, but the stock's just expensive for me. Same as Tesla, right? I love the product.
I
I've
do
owned
agree.
multiple, yeah.
I don't disagree. I've not bought Nvidia in a little
Yeah.
bit at this point. I've owned it for a
All
while.
right,
My
all
cost
right.
basis is 75. I'm lucky, but
I think Wolf's feeling left out. I think he's long AMD, right, Wolf?
Yes, 10x leveraged long both. All right, let's move on.
Yeah. Who's next there?
Well,
But yeah,
one sec. I don't think
yeah,
we have
okay.
time for more questions. We have 3 minutes until market close. My next space starts at market close. So I just want to see if any other people are in trades right now, just real quick. If anybody else is selling anything before market close. Gerg, you taking profits?
On what?
Everything.
He
Facebook.
doesn't trade.
No, I traded Facebook in the morning, but other than that, nothing. I bought the energy company, but I have no plan to sell for the next 6 months. And in this market, I would not swing anything short term. You never know what happens overnight. Just buy the next day. Like, why play for Theta Decay?
Yeah, I mean, it's an interesting
Yeah,
market.
let's not
Definitely
make a lot
difficult to
of
swing in.
sense to, yeah. Like, it doesn't make, I would say, sense to hold stuff overnight, especially that expires weeklies. Like, if you buy a call that expires Friday, why hold overnight and pay 1/3 the premium just for that? Unless you expect a big move, which is usually not gonna happen. So just wait for the open next day and just buy it then. But that's just me, though.
Yeah, I mean, I think people like to try to catch those morning gaps, but sadly they've been gapping down more than up.
I mean, you can buy put still, right?
Right,
No
well,
one stops anyone from just buying calls.
Retail still leans towards calls. It's changing. It's changing, but they still lean towards calls.
Yeah, and the call volume from Goldman Sachs, they said the retail call buying is down over 70% from the last 2 years. Let me find that note. I think I tweeted about that.
All right. Well, while you're finding it, I just want to get final words from others because we are going to change over to real estate space in a minute. Sim, anything else you want to say on this one?
I'm in a cash position. I'm not holding anything overnight. I took a nice 100% on those runners. I'm happy with that. Just gonna be watching SPY at the open tomorrow, as per usual. Definitely gonna be watching Shop as well. I like this strong close that we had. We're looking like we're gonna close over this 380 level, so it looks really nice. GME got a nice pop. Missed that though. Off the flag break, the volume wasn't there. Then it came out of nowhere, but it's fucking meme stock, so that's the way it trades, and that's okay. But yeah, that's about it, man. Thanks for having me on.
Yeah, absolutely. Pleasure having you on. Great call there. Yeah, SPY, really nice run throughout the evening here. All right, Andrew, anything else you want to share in the power hour space?
Yeah, I think the market did absolutely fantastic today. The dip buyers really stepped in. I did not buy anything into the close. I did not sell anything either. If we continue to just pump into the CPI number, then I'm more likely to take off longs into Friday. But thank you so much for having me up here, guys.
Good having you on, man. TSR, anything else from yourself?
Not really. Still within the range from the past like 6 or 7 sessions or whatever it is. be interesting to see which way we go.
Absolutely. Looking forward to it. Evan, looks like you're down. He's on the buzz. All right, Gerg, you found that last thing you wanted to say?
Yeah, it's on top right now.
All right. According to Goldman Sachs, retail call buying is down by 70%. I did see that. That was a pretty interesting one. Okay, we're going to roll into real estate. If any of my speakers want to stay on for a real estate talk, you're very welcome to. I own some real estate. I don't know if you all own some real estate, but we're going to be doing it with Lex. We've got Dill up here too. SoFlo, I know you came in a little bit late for the power hour. Would you like to stay for the real estate one? You're welcome on if you want
to. It's all good. Yeah, sorry about that. But no, it was, sorry I missed that. My bad.
Okay, well, no worries. And A-Stock, similar thing. If anybody's interested in real estate, we're going to talk fractionalized real estate mainly here for the next hour. And then after that, we have a really interesting conversation coming up as well, talking about the NBA Finals with some NFL and NBA players. So check that out coming up pretty shortly. But yeah, for now, we're going to roll right into real estate. We've got Alex here from the Lex team that's on with us. We've got Dill, famous Dill, is one of our guests for today. We might have one or two other guests. Dill, I think your friend's popping in too.
Yeah, I just shot Kyle a text and let him know to join us. I'm sure he'll be in any minute. Yeah, happy to be here. Excited about this topic. I mean, it's very cool. So I'm excited to learn a little bit more. And then hopefully Kyle comes in too. He's got a great perspective on this and works with a really great company that looks at all different types of fractionalized assets and tokenized assets.
Perfect. Yeah, really, really interesting area here with fractionalized. I do own some fractionalized real estate. Pretty excited about that. I own a little piece in Seattle via the Lex platform. We also have Toby on today as well, so we'll get to you in just a second, Toby. But Alex, what's going on?
Yeah, Goff, thanks for having me back. Great to be here and back talking about real estate, fractionalized real estate, and Lex. We may also get Connor back on. I know we had Connor on briefly last time. He was on vacation in Cabo trying to dial in, so his connection fell out. But he is now, unfortunately, back in New York and in our doom and gloom humid weather. There's Connor. There we go. But yeah, no, great to be up here and talk to all you guys about the real estate market and where Lex plays into it and how we think we're really changing the game for institutional owners and for retail and even non-retail investors. So with that, we'll give sort of a brief intro on Lex and myself and Connor, and then would love to get into it with you guys. So Lex has been around for a handful of years now, right? We've been about 5 years since we were founded. First 4 years were spent really in pure hardcore R&D mode. We built a full brokerage platform, a SEC registered ATS, alternative trading system, and an investment bank from scratch, right? On top of all that, we also pioneered a publicly traded partnership structure within Reg A, which all that word garble, for everyone who's not a lawyer, basically means we cracked the code to let non-accredited investors buy direct ownership interest into real estate, have all of the tax benefits of owning direct real estate, with all of the benefits of having a tradable security that can sit in your brokerage account and trade just like a stock. So instead of like a REIT having all sorts of income tax and being taxed ordinary income and owning a whole portfolio of things and paying a full company all these different fees to manage it and a full executive team, now you get to go and buy a property directly, sit side by side with the owner, not as a junior partner, no waterfalls or fees in the way, same economic interest as the owner, and invest in a single asset. And I think it's a really cool proposition, not just in general, because you get to actually go and invest in commercial real estate for the first time without having to shell out millions of dollars. And not only that, but one, you get access to deals that wouldn't otherwise be on the market because our structure actually provides advantages to owners as well. So a lot of owners of institutional real estate who don't want to sell their properties will come to Lex and put even better deals on the market that way. But also, yeah, you get all the tax benefits without any of the hassle of having to manage it or any of the capital requirements of having to come in. So really view Lex as a game changer there. And we're rolling. So we've done a few IPOs now. We got a test one done to go and test the concept with the SEC. That went well. It took them a long time to get their heads around it. There was a long delay, and we planned on that. So we did a really small first one that was all friends and family mostly. And now we're off to the races. We're actually live in the market with a passive house, so a 45-unit apartment building that is effectively like LEED Platinum on steroids. It is, super, super environmentally friendly, and it's the largest passive house in the Pacific Northwest, right in sort of the most prime area of Seattle. Irreplaceable asset built during 2020 before all the inflation and supply chain stuff hit. So cost of building this thing now, it's substantially higher than what this thing was actually built out for. Gives it a huge competitive advantage in the market, and it's really an irreplaceable, unique product in general, and one of the hottest, real estate residential markets in the country. So we're thrilled to have this asset out, and we'll move on. As to myself and for Connor, so I've been at Lex now for just over a year. We started building out the deal team right about the time that I joined in early 2021. Once we built all those other pieces here. Prior to this, did a couple of years at a AI-driven debt fund, doing primarily real estate debt. And prior to that was at Goldman Sachs structuring derivatives, and Eastdil Secured in London doing real estate M&A. And we've just brought on Connor here. I don't know if Connor's a speaker. We hired Connor. We're lucky enough to have him from Credit Suisse's real estate securitization division as a more recent joiner to the team.
Yeah, absolutely. We do have Connor up here. Connor, want to say anything there?
No, yeah, Alex did a good intro, but yeah, I just recently came over from Credit Suisse. I was working with commercial real estate loan origination and then securitization of those assets, and it's pretty similar to what we're doing here at Lex. So.
Okay, perfect. Awesome. Well, I think that was a great introduction there. So we have a couple speakers that are joining us today, other people in the real estate area. Main topic for today, obviously interested in exposure to real estate as a whole for retail. So I know Toby, you do some real estate investing. We've had you on a space before. We're going to kind of weave that in with, again, just like ways for retail to get access. Again, one of the main ways that I have access, and in fact, my only access right now, I was trying to look at how to get into real estate. Unfortunately, I don't have I didn't have necessarily the best due diligence understanding of how to go and actually evaluate other deals, nor did I really want to drop $10,000 right off the bat into some of these places. So instead, I went the route of fractionalized. So I bought access through the Lex platform to a building that's in Seattle. Now I basically get rent payments from there. I have asset appreciation, things along those lines. So for anyone that wants to check it out, I'm putting it together right now, but I'm going to make a post just so you can kind of see what I'm talking about and see the interface. But while I'm getting that up, Toby, do you want to kind of introduce yourself as well? Talk a little bit about, where you have been in the real estate world, and then just kind of thoughts on this, move to similar to stocks, like fractionalize things and try to bring more people into the picture.
Yeah. Thanks for having me again. So I've been investing in real estate for a while. I think fractionalized real estate is something that's new to me and pretty interesting. But I was investing in REITs, many years ago, and a few years ago actually jumped into direct investing into real estate. So I own a bunch of commercial properties with various partners. Some I serve as a general partner on, and some I seek out other general partners, and I'm just a limited partner in several deals. And so I think, real estate, I think is, like, broadly speaking, I think that when people think about, asset allocation and, trying to diversify their net worth, I think real estate is a huge piece of the puzzle that should be pretty much in everybody's portfolio. And I think, REITs have their own benefits. I mean, obviously it's easy. The friction to buy a REIT, you can buy it just like a stock. It has a yield, et cetera. But as these guys were mentioning, there are benefits to directly owning real estate. A lot of it is the tax benefits. And so I do mainly commercial. I'm a big multifamily guy. So just, love apartments. That's kind of been my bread and butter. I do a little bit of other sectors, but do a lot of apartments. And so, yeah, look, I think real estate's interesting. I think the last couple years we've seen, prop technology and offerings like fractionalized real estate starting to kind of gain traction. And I think it's really interesting because it can give, kind of retail investors access to investing in products and assets that they normally would not have gotten access to, because you do have to be an accredited investor to kind of invest in some of the larger deals. So yeah, I'll leave it there. Thanks for having me again, and happy to chat further.
Perfect. Well, yeah, Toby, I'd love for you to dig in a little bit further. How did it all kind of get started off the bat? You said, you wanted exposure to real estate, you went to the REITs, and then what made you kind of move to the next level, and how'd you do it?
Yeah, I mean, stocks are great. Stocks are great, especially, I think a lot of these FinTwit spaces are focused on growth stocks. And those are great, investing in transformational industries like software, et cetera, crypto, et cetera. But, I think real estate is, there's only a finite amount of land in the world. And if you look at, like all the billionaires around the world, a huge portion of wealth creation has been through real estate. And so I just kind of got involved a few years ago. I initially bought some REITs just to put some income into my portfolio. And so I would say that, I was buying REITs with kind of a 5 to 8% dividend yield. Some of the REITs, I was pretty early on in some of the gaming REITs. They own casinos, and that subsector has gotten more institutionalized lately. But some of these gaming REITs like Vici or GLPI used to have, 7 to 8% yields. And that's for an income, for the income portion of your portfolio, a 7 to 8% yield's pretty attractive. I really just got involved a few years ago. I was debating kind of going the single family home route and buying some single family homes and, doing the whole, fix them up and try to flip them. But I studied that for a while and just figured out, that's not really for me. And I basically just jumped straight into apartments. So my first couple deals were in the Midwest. Literally my first deal was a 30-unit apartment building that I bought for less than $1 million for 30 units. And, I put in some of my own capital, but I had some other partners and we raised some money from friends and family to do that deal. And we've done a couple of those deals. And, then just through networking, I met some other private equity firms that were buying sort of similar assets, but, actually way bigger assets. So I work with a few different firms that are buying assets between, kind of a $10 to $40 million purchase price. And I come in and just buy like a small chunk of that basically. But, I think, again, like I'm pretty much dedicated to multifamily. I own a little bit of other sectors, but I love multifamily. That's kind of like one of my favorite sectors in real estate. Obviously we've been on a crazy, amazing run in real estate the past few years. A lot of that has been driven by, interest rates going, being really low. Whenever interest rates go lower, that helps, leveraged assets like real estate, because since most real estate, most people are putting, call it 60 to 80% debt on the asset. And we've also had some economic tailwinds too. A lot of my assets are in sort of the Sun Belt markets like Texas or New Mexico, where they're seeing population growth, et cetera. So rents have been going up very strongly as well. So I just think it's been a good run. I think right now real estate is cyclical. And I think with interest rates rising a lot, that's something that has to be factored in. But I still think that there's good opportunities out there. And I think that I'm interested to, I think fractionalized real estate, I think giving retail investors access to things that are structured as partnerships where you get a K1 and you get the, depreciation tax benefits of that, I think is something that's really interesting.
Awesome, Toby. I think that's great. Alex, you want to come in on that?
Yeah, no, I completely agree. And Toby, appreciate the perspective. It's funny that you mentioned, your sort of first foray into real estate was through REITs, right? Because I think that was true and is true for a lot of people, right? Because they're accessible. You can go into your brokerage account, you can buy it,
for some amount of pocket change at a time, right? Sub $100 or sub $300 for one share of a REIT, and it kicks off an income yield, right? I think that, to your point, having the K1 ability to be able to bring that to retail investors and educate people and on those benefits and bring those benefits down market, I really think changes the game in terms of how real estate's being democratized across the investor base, right? I think this is something that lots of people aspire to do what you've done and transition into an apartment building. We've heard a lot of stories on this podcast, on this Twitter space of someone bought a place and they rented a room, or they had a roommate and paid the mortgage and then upgraded, and lots of people have done that over time, and that's been the requirement, right? If you want to get started from the bottom, that's been the way to do it. And I think we've now totally upended that dynamic. I think by giving people the ability to invest directly into real estate, other than by renting out their spare bedroom, we let people really sort of shortcut the process pretty substantially. And I think too, what's really interesting, because most people who invest in real estate, including, it sounds like yourself, Toby, the primary asset class you get exposed to as an individual is residential, right? And there's nothing wrong with that. There's a lot of great residential real estate opportunity in the United States. I do think it's a great asset class on the whole in the long run, because there's a huge shortage of housing units relative to our demographics, and we have lots of sort of political and structural barriers to building more supply. So I'm not against investing in multifamily, but what's interesting is two things. Is one, the risk profile of investing in multifamily real estate is quite different than that of other asset classes. And I think it can generally, not always, be safer, quote unquote, in the sense that you have that pretty constant macro factor, but you also have to actively manage people who renew their leases every year, and there's a certain kind of return profile that the market generates, right? Things get priced in. There's a lot of players in multifamily real estate. There's lots of sort of dynamics that drive that market that are quite different than those that drive the other kinds of asset classes, talking about office space, industrial assets, retail assets, self-storage assets, other kinds of unique kinds of commercial real estate that I think individuals never really have a chance to get exposed to unless they want to go and buy a REIT, because there really isn't an on-ramp to that, right? If you want to buy an office building, there's no way to rent out part of your office suite. You got to put up a few $1 million and go buy an office building. And if you wanted to buy equity office, that's great. Now you own an office building. They own it in a REIT where you probably own 300 of those office buildings in every market in the country. So you have no real play on an actual asset. You're playing the macro play of the REIT, and you're getting taxed at ordinary income rates on whatever the income is, not with a K1, which means you get none of the depreciation, you get none of the interest deductions, none of the operating deductions. If there's a ground lease present, you don't get to benefit from that. It's a really cool feature of being a direct owner, just how advantageous it is to your bottom line. So yeah, Toby, appreciate the story and glad you're able to help us highlight some of the advantages here.
Yeah, and I guess I'll jump in and just kind of say that, and I actually am interested in learning a little bit more about this. But I think I think it was like 2015 or something. The whole crowdsourcing thing kind of came out, and so there are marketplaces. CrowdStreet's obviously the largest one, but I wouldn't say that they're fully accessible to retail, because the minimums on those are still $25,000, and I think you still have to be accredited to be on CrowdStreet. I think that's right. And so, then there's like Cadre, which is another one, and they actually have a secondary marketplace too. So obviously it sounds like Lex is just even more, it's democratizing it even further. But I'd love to kind of maybe better understand, where you sit in the ecosystem, kind of how you compare to, I think I kind of have a general gist on how you're different from the crowdsourcing platforms, but, a little bit more color, I think the audience would appreciate that.
Yeah, no, and I'm glad you bring up some of our competitors here, right? So, there are a few different players in the space. So the timeline of how all this went down, right? So 2012, Obama had, the Jobs Act, right? And sort of opened up the concept of emerging growth type companies, right? So, basically saying, okay, you can have, and if you want to take something public, you don't have to have the standard level of crazy multi-million dollar disclosures that, companies used to need, that were prohibitive for things that were small. 2015, to your point, we got Reg A, right? So Regulation A, which is basically an alternative means of filing with the SEC. That's really just a channel of how do you get particularly smaller offerings through. And so Reg A actually has a cap. You can't do anything larger than $75 million with a Reg A offering. But if you're a smaller company and you're under that $75 million cap, you play by a different set of rules. It's not that it's the Wild West at all, right? I think when people talk about crypto and the crypto space, that is the Wild West. People are writing their own rules. Here, the SEC has just sort of said, okay, some of our really intensive stuff, like Sarbanes-Oxley, right, doesn't need to apply. And all of a sudden, you've brought the cost of bringing things public down by a lot. They also introduced Reg CF, Reg crowdfunding, right? And that is truly crowdfunding, right? What Lex does, people call it crowdfunding, and it's a little bit of a dirty word. It's not entirely accurate because we are different than Reg CF and what crowdfunding is, right? And just to lay out where the boundaries are with these and the main competitors. So what CrowdStreet does and what a lot of these guys do is they do what's called a Reg D offering, right? Which is the traditional old style way of doing it, right? It is a private placement deal. You have to either earn more than, I believe it's $250,000 a year, or have a net worth over $1 million of investable assets. So, aside from your house and whatever else, to even, consider qualifying to be able to invest in this stuff, which makes it very inaccessible. And it's not liquid. There are restrictions on how, once you've bought that stuff, your actual ability to dispose of it, right? And that's how people have done this stuff historically. And CrowdStreet, still does that, right? That is their model. And they've built, a web platform where they can solicit Reg D investors. And so they can bring in, a larger number of Reg D people, but they haven't really done anything to change how it works for the owners or for everyday investors, number one. And number two, they haven't really changed the economics. I think one of the really cool things about Lex that CrowdStreet doesn't do, CrowdStreet, you come in as a limited partner, which is how most people have always invested in real estate, right? And that says, okay, it wasn't your idea, it wasn't your project, right? You came in just as the money. And because you're just the money, you don't get the same returns. You don't get the same economics as the other guys, right? You get charged fees. You get charged what's called a promote, right? There's a preferred return. There's a number of pieces that really change how that deal gets done on places like CrowdStreet. So that's one iteration of it. Then you have, the other big competitor that you didn't bring up is called Realty Mogul, right? Realty Mogul does a mixture of things. There are two main things they do. They do a number of Reg Ds. It's the exact same thing. They also have a REIT, right? So that's just like going out before and buying equity office or equity residential. So you're buying a collection of properties, usually, right? In this case, so you have not just one, but multiple, and you're buying a structure where you're buying the portfolio and they're giving you distributions out of that portfolio that are taxed as ordinary income, and they're charging a really substantial management fee on top of it. And unlike a normal REIT, that REIT doesn't actually trade. I believe, I have to go check this, I believe there's actually a penalty if you want to get your money back earlier, right? Same with CrowdStreet. If you buy into CrowdStreet, you're in for the life of the deal, right? And same with Cadre, you're in for the life of the deal. With Lex, what we've done is, again, we've really pioneered the Reg A structure here, which Reg A has no liquidity requirement. There's no liquidity restrictions, right? So if hypothetically you can buy a share, and once the IPO is closed and it's live and trading, right? Once you've collected all the money and the stock is live, you can trade, buy it back the same day, trade it out the same day. You're allowed to trade, however you'd like. There's no restriction on that, which is a really unique thing. And again, you get to sit side by side economically with the owner, which really no one else is out there is doing, right? And the reason why Lex is able to do that is multifold, right? So most owners, when they take in outside money, That money usually, one, has a voice, two, has a term, right? And with Lex, that's not true, right? So with Lex, you don't get to go and call and harass the real estate owner all the time. We sit in the middle. We manage the investor base, and we manage the relationship with the owner, and we simplify things on both ends, right? And if and when you want to sell, most importantly, you get to sell onto the marketplace that we created, right? We were, I believe, the first of these platforms to have an alternative trading system registered with the SEC, and to set this up where people can actually trade in and out without having to bother the sponsor. And that gives the sponsor an incredible amount of flexibility to hold this stuff forever, right? That they don't have investors pounding on their door to go and buy these things. Another big difference, and it's not a structural difference, but it's a practical difference. Lex only, at this point in time, offers stabilized cash flowing real estate, right? Now, I need to be very careful on how I word this so they don't have the SEC knocking at my door, but in general, stabilized assets are less risky than development type assets or value add type assets, right? There's different kinds of risk profiles, right? So if you build a building from scratch, there's lots of things that can go wrong in construction. Stuff can get delayed. That increases the cost of your loan. You could have a fire while you're building. You could finish the building, and then maybe people don't rent it as fast as you need to, and you're losing money because it didn't rent up as fast as you'd projected. There's a lot more that goes wrong on that part of the project. When Lex comes in, the buildings that we're offering right now, right? These are things where the construction's done, the building's built, the tenants are in, right? You're buying an asset that's already running, and someone's managing it for you, right? You're sitting side by side with a sponsor where the sponsor has to stay in the deal, right? And so the sponsor is incentivized to perform as well as they possibly can because they still have interest in the deal. And you get to just ride the coattails and ride along, but enjoy the same economics that they enjoy. And that's a really unique opportunity that no one else is offering.
Love it. Thank you, Alex, for the run through. Kyle, I would love to bring you in on this real quick. Before I do so, I just want to tell everybody that's been listening, if you have interest in this, I did say I was going to post the platform so you can kind of see what this looks like. And this is real in depth. Like, I recommend everybody hop in and take a look, because this is where you can actually go and see some of the easiest research you're going to be able to do in investing in real estate at some of the lowest prices. And for today, for those that are interested, there is a link. It is pinned up top in the space. I also posted a screenshot underneath it. And if you click through that link and use that to make your account, which literally takes a couple of minutes, maybe less, you can do it while you're on the space here easily, there's a $50 bonus built into that. So you can go claim $50 towards your first piece of real estate. I think once you fund the account, you get it. And I think the minimum is like $250. So you're basically getting 20% of your first real estate purchase paid for right there. So that's what I recommend going ahead and using. Again, that is pinned up top. I recommend just clicking the link regardless to see what the platform looks like, because it's a really nice layout and interface. And that's the only pinned link that you'll see up top. And then underneath it, you'll see the property that I just invested in Seattle. So that's the Solis Capitol Hill property. I went ahead and I expressed interest in the IPO. The IPO is going to close once all the shares are allocated, and then the shares will open for trading. So right now, I basically am buying into the IPO. So waiting for those shares to be sold out before that starts trading. So that's pretty exciting to me. All right, Kyle, we'd love to hear a little bit from you as to, your background in real estate, what you're doing here, and then kind of thoughts on like this fractionalization of real estate and anything else you'd like to share.
Yeah, hey everybody. Thanks, Wolf, for having me on, and Dill as well for always keeping me in mind. You guys do amazing work, and so I'm happy to be here. So basically, I'm Kyle Sonlin. My background it ranges across a few different industries. I got into the artificial intelligence and blockchain space about 10 years ago, specifically focused on consensus mechanisms and some of the deeper technologies. That brought me through a lot of the crypto stuff, and I certainly do plenty of investing on the public markets as well as on the private markets as well, with my primary focus today being running Security Token Market, which is a business. We're based here in Miami, Florida, and we focus on tracking data on private securities, and specifically those that are trading on chain. But we work quite a bit with brokers and ATSs, and so over the past 5 years, I have probably spent 6 or maybe even 7 figures on legal counsel on all different pieces of this puzzle in terms of figuring out how to leverage retail access to private securities, and of course, everything that goes into it, because just the investment process is certainly only one piece of the puzzle here. When you're talking about secondary transactions, now you're involving transfer agents, now you're involving international securities laws, and having to do interoperability between jurisdictions, as well as tax structures, and many other pieces that are involved here in this process. And so through my journey in this life, I have spent a lot of time here in Miami working with some of the large family offices and brokers that are looking to fractionalize more of their CMBS stuffs, commercial properties. But there's also, I've had a lot of time with working with Realty, which is a company based in Boca, and they're doing a lot of single family retail crowdfunding as well. So we certainly I have a pretty good background on real estate, as well as a lot of the financial structures behind it. And then of course, how someday in the future, a lot of this will be, in my opinion, tokenized, solely due to the fact that smart contracts allow us to automate a lot of the compliance information and compliance requirements that are set forth by the SEC and other jurisdictions. So actually every international jurisdiction has their own securities laws that is actually on the issuer to comply with, as well as the transfer agent needs to be able to not only distribute the shares properly across jurisdictions, the exchange needs to facilitate the monetary transaction, referral fees need to be paid, and success fees need to be paid to underlying brokers and the like. And then, of course, that information needs to be publicly auditable around who is actually making those purchases, who's getting involved in this process, and how all that can be managed. And quite frankly, this is something that investment banks do right now, but they throw hundreds of thousands of people at it every year to just monkey down details from one Excel sheet to another. And there's just a lot of button pushers that are going on in the financial industry. And a lot of that, I think, can be automated in the same way that automation has taken over a lot of our other industries. And that's the benefit of smart contracts. But those smart contracts only work, and we can only automate this information if it's done with information that's immutable and that we can track and be secure about. So that's my funny little gospel around blockchain. But I'm not one of those guys that's going to focus on that the whole time. I think that real estate is a fascinating opportunity to increase access to investors. And so my background is in the secondary markets and seeing trading. And so, Lex, I'm actually really excited to be here on the panel with you, because I think we could have some interesting back and forth. I have a couple of interesting thoughts. One revolves around liquidity on secondary markets, and I think that especially with securities, people like to think that for illiquid assets, that these securities are just the only reason that these investments are liquid is because they are not easily able to be traded. And I think that, as we've seen so far, that's actually not very true. What we see on the markets today, on a trading perspective, is a few things. One, this is actually maybe the most obvious one that people overlook quite a bit, and that is the fact that if you invest in a deal, you're buying a deal, you're really excited about it, right? It's a real estate property, it's going to pay you dividends, you're bullish on that property, and you're excited to make an investment in it. Wolf, just like you said with the property in Seattle, the problem is that you don't want to sell that property. And so what we've seen with a lot of these ATSs and a lot of these secondary market brokers is actually the fact that the investors themselves don't want to sell their shares, because, of course, why would they? The whole point of them buying it wasn't to flip it necessarily. The point of them buying it was because they wanted to hold on. They believed in the vision of the company, or in this case, they believed in the value proposition of the real estate. And so it actually sometimes can cause supply constraints due to the fact that nobody actually wants to sell, which then makes it seem like it's not a very liquidly trading asset, that there's not a lot of movement going on, when in reality it's actually quite the opposite, and we've actually seen that in quite some cases with existing ATSs. And so, Lex, I wanted to hear your thoughts around building liquidity on a secondary market. Again, as we mentioned with Reg A Plus, there is no seasoning period. You are able to trade that token immediately after buying it. But what's kind of your perspective on people that may actually not want to sell, and if we should be maybe shifting the time horizons of liquidity forward a few years?
Yeah, no, that's a really great question, and thank you for framing that, Kyle. Yeah, I mean, firstly, I want to start out by agreeing with the bulk of what you said, right? This is a different kind of investment than buying a stock, right? When you buy, Facebook or Google, they're in the headlines every day. There's equity research on them. They have hedge fund buyers. There are algorithmic traders trying to go, buy minute differences minute to minute in the stock price. There's a lot of people and a lot of different kinds of buyers for these, broad popular stocks that create, firstly, a lot of liquidity, but secondly, a lot of irrationality and market movement and weirdness, right? That where there's a disconnection between the value of what's actually there and what that actual share price is, right? And I do agree with you, Kyle. I think the people who are investing in real estate are not trying to invest it to be day traders, right? They're not trying to ride some crazy, interesting headline news or whatnot. They're investing because they like the asset and they buy the story of the asset and they want to get their return on the real estate. Now, to the extent that causes a shortage of sellers, I say that's great, right? Because what that means is that everyone is able to come in and have access at a transparent price point. If you were with Lex, you have what's called a lit order book, right? So if there's no sellers at 250 a share, you could offer 270 a share, and maybe someone wants to be a seller at 270 because they'll say, you know what, I've only been a holder for a week. If I get $20 today, I'll let the next guy hold it and get the rest of it, right? There's in investing in general, there's always that balance between what's your potential upside in the long run and how much money can you realize today, right? Your IRR is really based on not just your equity multiple and how many dollars you've made, but your time frame and how long you've made it for. And people's requirements on that are always going to be different. And so having a market where you do have the ability to trade whenever you'd like and the ability to make offers and sell and whatnot, I think is really healthy. And what makes it even healthier is we actually have a calculator tool that shows people and it shows investors what the NAV of the building, quote unquote, should be based on a set of assumptions they're able to go put in. Right. So if you believe, the building's going to hit the projections and the market's going to do what the market said it's going to do and all of the other stuff, right? You can say, the market price of the share should be at 270 a share and it's only at 250, but I'll put in an offer for 269 because why not? Right. And you hope actually stabilize the market. And that doesn't really exist out elsewhere, right? If you look at REITs trade at a huge disconnection, either premium or discount to NAV, to NAV, net asset value, right? Because one, there's no tool people use to go try to connect those things, and two, they're subject to all those other whims of the market we just described: hedge funds, interest rates, random buyers and sellers. Sam Zell joins a political advisory committee, be it for Biden or Trump or whatnot. And all of a sudden you have people say, well, I don't want that in my portfolio anymore, right? There's lots of other noise that gets into the market that gets to be taken out here. I think it's actually really, really healthy for the marketplace.
That's pretty interesting. I like your perspective there. And I think that especially with order books, I mean, unfortunately, due to ATS regulations, I don't know if people are familiar, but there are restrictions around how liquid you actually can operate a market as an ATS versus an exchange. And so with an ATS, alternative trading system, it's essentially like a light version or a freemium version of what you'd imagine an exchange to look like. And so basically the way that it works is that you need to post an order to the platform. So you need to say, I'm willing to buy X amount of shares at a future predetermined price. So think about it like if anyone's familiar with the stock market, you have market and you have limit orders. This is essentially, as an ATS, you can really only facilitate limit orders in the sense that you're only able to allow somebody to dictate a specific price in which they are open to purchasing or a specific price in which they're interested in selling. And then they need to wait for another person on the other side of the trade to agree to the contract terms that are put forward. And that's a pretty important distinction to make as opposed to a market order, or what I think it's order matching is what it's called legally with regards to a national exchange license, an N1 license. is where they essentially can find two different buyers and sellers, one buyer and one seller, and say, okay, let's arbitrate or let's find a medium price that both sides are comfortable with taking, and that exchange will essentially do the work of finding someone to buy the shares for you, even if it's at a different price than you were necessarily looking for. You're more concerned from a time perspective of being able to buy at that exact moment or sell at that exact moment, as opposed to buying or selling at an exact price. So there's kind of two different ways to look at how those orders work. And certainly, Lex, jump in if you want to.
Yeah, I do want to jump in there. So you're partially correct, Kyle. I do want to disagree with a little bit of what's there. So the ATS versus exchange distinction, freemium is maybe it's a little bit misleading in my opinion, right? The main difference of an ATS is it's a little bit like an exchange that doesn't have a lot of the rules that come along with exchanges. Now, to your point, some of those rules come with features and infrastructure that already exists, but a lot of that stuff can be built onto an ATS. And I think that's kind of where Lex has done a really good job of building this thing out. So Lex has actually partnered with NASDAQ, and NASDAQ's matching algorithm that you were just talking about has actually been licensed by us, and we actually leverage that on our ATS. So we do have, that ability that's been provided by NASDAQ's matching algorithm, and we've built on top of that. And actually, our engineering team is so good; they've actually given feedback back to NASDAQ and fixed a number of bugs and helped improve the NASDAQ system as a part of our deal. So that's not a trait that is, that isn't available on ATSs. It is very difficult, right? It's not normal ATS. You don't get that feature just by being an ATS, but by being an ATS doesn't mean you don't have it, and Lex is very lucky enough to have it. Yep.
Interesting. I thought it was a regulation component.
No, it is an infrastructure component, and I agree that it's an important piece in building a market, and it's a piece that Lex actually has. We built that partnership early on. And to your point about market prices, right? A market price is set by a market maker, right? And on exchanges, most stocks, if not all stocks, have market makers. Right. And those are the guys that sit in the middle and they say, you can sell your share instantly because we will quote you a price and here's what we think is fair. And that's how you get the bid spread ask, right? Because a market maker sits there in the middle and says, I'm willing to buy anybody's share at this, and I'm willing to sell anybody a share at that. And I'll sit there in the middle and go collect my spread. Right. Again, that's not a feature of exchanges. That's just what market makers do. The way that Lex has structured its securities and its ATS, unique amongst our competitors, we're actually market maker compatible, right? So we're in the process right now of working with a number of market makers and bringing them on board the platform. And so in the medium to long term, that's going to be an option. Now, it's really annoying just to highlight why it hasn't happened yet. So the way that market making and that regulatory set works here is the first person to make a market in a security has like hundreds of pages of documents to fill out. It is a ridiculous process, right? Once the first person's done it, then the next two have a lighter process, right? They get to follow on. And once there are three, then it becomes very easy and the paperwork gets even lighter, right? So it's really this barrier to entry of getting the first one and then the next couple, and then the floodgates are open if anyone can go and make a market and provide bid-ask spreads on this. And so Lex is working with people in terms of how we figure out how to sort of help them with the legal process and incentivize them to come on board and do some of this stuff, because it is a lot of upfront work for an outside party. Right, you really need someone to be friendly and willing to go take a chance on you. But once you have those first few, then you have that feature on your ATS. And so Lex is actively working on having that, and will have that, sometime in the near future. In terms of liquidity on the platform, though, too, I just want to mention. So, the biggest component outside of what we've talked about, right? Market makers are huge, right? The ability to have matching systems in place, which we have, is substantial. But at the end of the day, the biggest two factors really are, one, how many buyers are there on your market? And two, how substantial are those buyers, right? And Lex has scaled now. I think we have close to 20,000 users on the platform, right? We raised the Series A back at the start of the year. We're spending a very large amount of money on marketing and trying to go and bring in users, right? And so we've grown, I think we've almost doubled the size of the marketplace, even just in the last few months, right? And we're rapidly scaling that. It's going to grow exponentially. And as you get more and more users signed up and trading, that expands the amount of liquidity present, right? On top of that, once you hit minimum liquidity thresholds, you start becoming interesting to the exchange traded funds and the other sort of fund collection vehicles out there, right? Because they all have they love to have real estate exposure. There are people who recognize the advantages this has to a REIT in their portfolio, but they have to hit their organizational structural requirement of this much liquidity, this many trades per day. But then once you have that, oh wow, now they can dedicate 1, 2, 3% of their fund to you, right? And that adds an enormous amount of liquidity to the market. So it's really a non-linear thing, right? We're in the stage right now where it isn't the most liquid market, but it does trade. There are multiple trades a day, every day, right? You can get out of this thing if and when you want to. You're not in money jail. And over time, as we scale the number of people, as we have market makers come on board and finalize that process, as we have the funds come on board and start their allocations once we've hit the earlier liquidity requirements, then this thing really starts to look and feel a lot more like what people are used to in terms of liquidity.
I had a question for you that's slightly on a different topic that I wanted to hear your perspective on if you're ready for it, Lex.
Yeah, hit me.
So what we've seen a lot, and so I do a lot of market data and media stuff, but I also do some consulting with some private issuers, and specifically one that we worked with. He was able to do a Reg D 506C, which for anyone listening, that's the pretty traditional, at least now, post Jobs Act method of fundraising, where it is accredited only for who can invest, but you can do what's called general solicitation, which allows you to market the deal to anybody. So you could get a Super Bowl ad if you wanted to, but you have to only allow accredited investors to invest. So it still is pretty restrictive for involving retail. However, there's no limits on how much you can raise, right? So it's valuable if you're trying to raise a lot of money or if you're trying to do it quickly, because it doesn't require any approvals. You're essentially just filing and telling the SEC that you're doing it. However, why I bring it up is that I think only recently it seems like it's pretty novel, at least in specifically tokenized securities. I'm not sure if you have any experience with this, is using Rule 144 on the secondary markets to involve retail. And so I don't know if you have perspective on that. Rule 144 is this clause or small piece of the private fundraising exemptions framework set forth by the Jobs Act. And the rules suggest, and at least it says, and we've executed in practice multiple times, is the idea that you could raise from accredited in that primary sale, but then once it hits secondary markets, as long as you do some level of diligence and compliance and you prevent insiders from dumping onto retail public, there does seem to be access for retail, just anybody, to invest or participate in a deal, while despite the fact that you only could raise from the primary side from accredited. And so since Reg A Plus and Reg CF, I'm doing a CF now actually with my company, since it's pretty prohibitive with regards to just how long it takes to get audited and all of these other pieces, do you see a Reg D 506C with a Rule 144 backdoor onto a secondary ATS as a potential opportunity to drive liquidity earlier as we continue to solidify the rails for Reg A+?
So my understanding of 144 is that you need to have a quib that sort of facilitate that trade, right? You can't just have, Joe Schmo off the street show up and say, hey, I want to go buy this. As I understood it, it either had to be A, there's some affiliation where Joe Schmo works for the company, and even though he's not accredited, he's able to buy a share, or B, some institution with 25 million or more in assets buys it and otherwise facilitates the sale to Joe Schmo,
That is not
right?
how it's been executed in practice, at least from the markets that I've seen from T0, from securitized markets, and some other ATSs that have been leveraging that exemption, as well as Merge, which is the nationally licensed exchange internationally. So again, I'm not a lawyer, and none of this is
No,
financial advice.
yeah, same here. I feel like if my lawyer is listening, he's
Yeah.
probably having a heart attack.
But it's interesting. It's a fun and interesting avenue that potentially I'd love to. I think that you and I certainly, it might make sense for us to jump on a call and discuss some things separately of how we can collaborate. But I've seen that structure, and it does seem like something relatively novel that presents a cool opportunity for additional asset liquidity as well.
Yeah, no, it's very interesting because I've heard of T0 and I've seen some of what they've done. It is quite interesting. I hadn't figured out how they were doing it. This is good learning for me that it's happening through that 144A component. Yeah. I would really love to learn more about that because that could be a really cool answer.
I wrote an article on it on Medium a few years ago. I'm actually going to shoot it your way, and that's probably a good place to start because I'm certainly not a lawyer, so it was kind of my interpretation of the regulation.
Yeah, no, let's go sync offline on this. I don't want to bore the audience with us being 10 lawyers. But no, I mean we're close to the end. It might be good, Gav, if we want to open it up to some questions. I'm happy to take questions about Lex, and also we haven't talked at all about the markets, which I love. I love talking markets. So anybody who wants to ask markets questions, hit me.
All right, I got two things here. Well, first off, I definitely want to bring Dill in as well. I know that we've been living vicariously through Kyle, but I want to get some Dill in here too, and then see if Toby has any other comments as well because we have about 9 minutes left here. One more time, I also want to remind people, if you want to start your real estate journey today, which I recommend doing, I just purchased some real estate yesterday. The easiest way to do that is go to the link that is pinned above. There is a tweet. It is pinned in the top of this space. It is one of my latest tweets. If you can't find it, the link is also in my bio. It's where you can claim $50 towards your first piece of real estate. Pretty helpful for me. It was nice. I was able to use this to go ahead and purchase some real estate through the Fractionalized Lex platform. Comes with all the benefits you've heard today. Tax benefits. They do a ton of due diligence for you to sort through these properties and make it a much narrower funnel that you have to actually look through. All the details and info is already there. The buildings are built. The tenants are ready. So there is a lot going on here. Making an account takes literally a couple minutes, and you get that $50 once you fund the account, but you can make it at any point and have it ready to go for when you're ready to do it. So again, that is pinned up top in the space, and link is in my bio as well. Dill, wanted to check in with you and see if there's any other things you had that you wanted to kind of share with regards to real estate or any thoughts you had from the conversation today. And then anybody that wants to have a question, feel free to request.
Yeah, I mean, thanks for having me. I think this conversation is really important. I think what the most important thing is that it's allowing anyone to get access to some of these investments that have typically only been able to be accessed by, the top investors, right? And so now it's kind of making a way that anybody can get in on this. So happy to come in and support and sort of get this exposure from my audience too, because I think these are like really important investments and just another way that technology is breaking down the barriers to investing in great assets. So happy to come up and support. And yeah, I mean, I'll tag in Kyle 10 times out of 10 if we're talking about this stuff because he knows a lot more than me. But, I worked in marketing for Vertalo, doing tokenization of real estate for about a year. So I do know a bit about the industry, but mostly just here to support and be a part of the conversation. So thanks for having me.
Absolutely. Good to have you on as well. Okay, again, open invite stands for anybody that has questions. In the meantime, we have about 6 more minutes here. We are going to have a pretty cool space. Just a reminder, coming up in 6 minutes, we are going to have on AJ Bouye. He's in the NFL. His cousin is Jaylen Brown. He's currently playing in the NBA Finals. We're also going to have on a few other sports-related folks who are going to be joining us to talk about it. And, of course, the Beehive crew, the #1 newsletter service on Twitter, will be joining us. I switched over to Beehive last week.
I love Beehive. We
man.
Too.
Ramp Capital, Liquidity, Kyle, Sondland, we're all with Beehive. So a lot of great tools there. So we've got their team, their CEOs coming on in just a few minutes here. All right, We had a Gritty requested. It was Steve. Someone requested to come up, but unfortunately they are not here. And I see Alex just got bumped off for a second. So hopefully we'll get him back in just a minute. But in the meantime, Toby, I wanted to come back to you for a second, see if there were any other thoughts on kind of the space overall that you wanted to share.
No, I mean, I think this covered, we covered a lot of ground. I mean, I'm kind of, I'm more of a traditional real estate investor, but, we discussed the crowdfunding sites, and that's a newer development, over the last decade or so. But I think this stuff is fractionalized real estate sounds pretty interesting. And I'm all for, anything that kind of democratizes, retail investors getting a piece of ownership of actual direct real estate assets.
Got you. Awesome. Love it. All right. Steve Daniels, you got a question?
Yeah, I don't know. I don't know if Lex already covered this, but I was just wondering if there was any updates on the landing up in Nashua, New Hampshire.
Yeah, we haven't touched on that one yet. So the landing is a deal we've been actively working on. I'm really excited about it. It's a great industrial asset in Nashua, New Hampshire, as Steve just mentioned, right across the border from Massachusetts. So we're intending to file that in the next few days. Once it gets filed, the SEC has to go qualify it, and FINRA has to go and take a look through it. So it should be about a month from the time that we file it in the next few days. And at that point, we're going to be rapidly collecting orders. So the idea here is, sometime in mid-July, the way that we're promoting this thing, both to retail and non-retail, we're expecting it to go explode on the IPO is really the hope. So, we'd love to have, people who have their IOIs in are going to get preference. And we're going to call you up first and give you that first shake. So we're going to have it out shortly. I'm very excited about the deal. Glad you were able to ask about it. And let us know if you're interested, and we'll make sure you get an allocation here.
Oh, I already put in my IOI.
Excellent.
Yeah, I got 2 in for Solace over in Washington. Yeah, I like the platform. I co-signed everything that's already been said. It's really user friendly. I got signed up pretty easily, and I'm just excited to see where this goes.
Totally. And for Solace, if you put in an IOI, it doesn't convert automatically to an order. We are now taking those orders. So if you have IOIs in for Solace, you haven't converted it yet, definitely worth logging back on the platform and making sure you get that converted before it fills up.
Gotcha. Yeah, I went ahead and I should have rephrased. I went ahead and put in an order for 2 shares.
Oh, excellent. Very glad to have you on as an investor. And we'll let you know as soon as the Menza Freeman property lending at One Chestnut's out.
Super stoked. Thanks.
Yeah.
Love it. Awesome. Okay, so we're coming up here with just about 2 minutes left, so we're going to walk around, just see any final comments. I think we heard from Toby. Steve, appreciate you coming up and sharing that. There you go. You heard it from someone directly who's used the platform, who's not me, kind of vouching for it there, so that's good to hear as well. I see we already have the Beehive team coming up. Alex, it might be helpful actually just to get like 1 to 2 minutes here towards the end, and then you can kind of use the time to wrap up on, just thoughts on the markets, because you said you wanted to talk about that. I know not a lot of time, but
totally. Well, I think, one of the most interesting things that I've seen the last few weeks, transaction volume of residential housing in Phoenix, Arizona, which has been one of the hottest markets of the last few years, is down 89% this month, or month of May, year over year, right? 89% decline. Now, a large part of that is due to where rates have gone, right? And that you have the Fed raising rates to combat inflation. That makes mortgages more expensive, makes buyers less likely to come in. Now, that's a macro play, and it's going to affect markets that have ridden the macro wave, right? And what happens when you see 90% drops, 89% drops in people buying is usually prices then fall thereafter, right? That's supply and demand. I think one of the things that I love to get into with market conversations, which I know we're very tight on time, there are ways around that, because not every submarket, not every area, not every asset class performs the same way. And I think being able to point at something like Arizona and say, oh my God, some places are really suffering is a great thing to highlight the advantage of being able to pick your shots with Lex and pick individual assets instead of whole macro plays and get the right assets that are going to be, hopefully insulated from that.
Love it. Great stuff there, Alex. I'm glad you're able to fit that into 2 minutes. Kyle, Dill, Toby, really great having you on. If anyone hasn't gone ahead and given them a follow, Toby does a ton of stuff both in the real estate space and the cannabis space, really multi-purpose on these spaces. Kyle, obviously big in real estate, doing some stuff with tokens I see as well. Dill, all over my Web3 space, is a huge presence. Really, really great to have you guys on, and looking forward to doing more spaces together with you, Dill, on Thursday. Alex, any last words you'd like to say here?
No, other than thank you again for having me on. Always a pleasure. And Kyle, please shoot me a DM, and we'll sync. We have some cool things to talk about.
For sure. Thanks everybody for having me on. Stay on for the rest of the panel. Tyler Denk and the Beehive guys are dope. A lot of us use their newsletter software, and I'm sure that panel is going to be fantastic as well. Thanks again, Wolf.
Absolutely appreciate it, Kyle. Take care.
Thanks, guys.
Feel free to hang around if you'd like. If anybody's into sports. All right, what's going on, Mr. Denk?
Yo, what's up? What's good, Kyle? Appreciate the shout out to end the last Twitter space.
Yeah, Kyle definitely is a fan. He said he's using the platform as well. I see Liam in the audience. I went ahead and shot him an invite. We can shoot out a couple other invites if we want. I invited AJ. He said he's going to be about 5 minutes late. Who else do we have coming on, Tyler?
We have Justin from Overtime. Maybe a few other people from Overtime. We have Elliot from, there we go with Elliot from Fantasy Life. We've got a whole squad of sports media operators, honestly. So
pretty exciting. What's up, Liam?
Sports media operator's a stretch. More like professional shit poster, but I'll take it.
One and the same, honestly.
You caught me.
I love it. Let me go ahead and I just retweeted the space from the one that we put out earlier. Okay. So I think I see Elliot as well, just came into the audience. I see Justin just joined up. So I think we're looking pretty good to get rolling here, right, Tyler?
Yeah. Elliot, I don't know if you're on mobile, but to be a speaker, you need to be on mobile for Twitter Spaces. So just a little heads up there. And then Justin, are you on the Even the Odds account?
Yeah, what's going on, everyone? This is Justin.
Yo, what's up?
I think from my end, too, we might have Jack join on one of our other accounts, but when he pops in, you'll see Bracket X is the name of the account he's on.
Dope. Wolf, you want to set the stage, and then we could probably toss it to Justin and do a quick intro?
Absolutely, yeah. So for anyone who was in my last couple spaces, you're coming from stock market and real estate, and we want to continue bringing through this world of entertainment and education. With this one, I'm really excited for it. If anybody's been paying attention, we have a lot of sports going on right now. We've got the NBA Finals currently in swing. We've got an upcoming season for the NFL, preseason starting in a couple months, and so much more. And one of the biggest markets surrounding all this is sports betting, sports gambling. It has brought so many more people in. They now literally show it on the screens all the time. It was taboo 10 years ago, but now they're signing huge contracts with FanDuel and others. So with that being said, we each week try to highlight a different author that works with Beehive. So again, I mentioned this last space. I switched over to Beehive. I've been sending my emails out on Beehive. My open rate went up 13%, by the way, this week from where I was sending them out on review. I just want to say, now I switched up my content a little bit, but I'm also hoping that Beehive has some little magic tricks they're sticking in there. With that being said, Tyler Denk, CEO at Beehive, the #1 newsletter service for creators on Twitter, used by myself, many others, Ramp Capital, Liquidity, Jack Rains. We just had on Kyle Somlin, who uses it apparently. And so for today, the newsletter which we're highlighting is going to be Even the Odds with, you can see them at Overtime ETO. They like sports and they like to write newsletters. So they're here. We're going to talk about this sports gambling and media. We also have a few other incredible guest speakers that I'll let Tyler kind of get to, but that is the stage being set here. And I'm always down to talk sports gambling. So let's get into it, Tyler. And I see Bracket X. Are they coming up too?
Yep. Let's get them up here. And I think maybe let's start. Actually, I'd love to get the other people involved early. If I'm going to get Liam and Elliot.
AJ up here too, who's about to come up. AJ, you do have to be on mobile. Just make sure on a mobile device. And once AJ's up, we'll try to get to him in the beginning too, because he has limited time as well. But yeah, if we want to start off with someone while we're getting AJ up, that's perfect.
Yeah, I'd love to hear a quick background on both Liam and Elliot, and then maybe Bracket X, and then we can dive in for Justin to give the rundown of Overtime as a company, what they're doing, what the newsletter and media play is, and I guess like the play at large, and we can kind of dig in there. But I guess I'll pass to Liam first.
Yeah, Tyler, thanks for having me on, and Wolf, thanks also for hosting this. Quick background: spent 3.5 years working at Goldman Sachs in the energy technology group, and got cross-staffed across stadium financing. Decided that was no longer the route for me to kind of make a living, and decided that becoming a newsletter writer would be the best potential option. Joined Front Office Sports about a year and some change ago, and have been kind of writing business deep dives on the industry of sports for Front Office Sports while helping kind of grow our subscription product as well. So as a quick background.
Elliot, you want to take the floor?
Yeah, absolutely. I appreciate you guys having me on. My background is a little similar to Liam's. Started at Prudential, working in finance, realized that was not for me. Always had a passion for sports and dove in. Originally started at PFF and has been working in startups the last 6 years from both a content creation standpoint, a product standpoint, a business development standpoint, and partnered with Matthew early in March. And we brought over the newsletter to Beehive about 6 weeks ago, and it's been just absolutely tremendous and really excited for what we're building, attacking things not from a subscription side, but from more of a media side, building out a newsletter, supporting website, having tools, everything meant to just generate leads on emails, having a massive audience and being able to both sell advertisements and then take advantage of the sports betting boom and deliver our consumers to different platforms, whether it's a sports book or a place like Underdog Fantasy, and be able to take advantage of that massive market as well.
And then I guess before getting to Justin, AJ, and any words, want to introduce yourself?
How's it going, guys?
Good, man. What's up?
Not much. Gav, how are you, bro?
I'm living the dream. Good to hear your voice.
Yes, sir. Yes, sir.
Yeah, absolutely. Would you mind, AJ, for those who aren't familiar, would you mind introducing yourself?
AJ Boye, cornerback in the NFL, just finished up my 9th year.
Very nice. And cousin to a man who's getting a lot of TV time nowadays.
Oh, yeah, definitely. Hopefully ain't got any Warriors fans in here, but go Celtics. Let that be known now. So definitely excited for it.
Cool. This is officially a Celtics Twitter space, so we'll ride with that. And then from there, Justin, you want to give a quick rundown, background on yourself and just Overtime at large, and we can dig in?
Yeah, what's going on, everyone? Thank you for having me. My name is Justin Schnell. I've been at Overtime, which for those of you who do not know is kind of like the Gen Z sports company. You know, we like to position ourselves in the sports world for a younger consumer and try to keep up with their watching habits, buying habits, you know, what type of content they like, what they're interested in. So we're constantly building and trying new things, which will lead me to what we're doing on the newsletter front. But yeah, I've been here for about 2.5 years. We started a newsletter back in September. You know, we as a company are growing from a follower count perspective pretty quickly. A lot of people know us because of Overtime Elite, so we're growing on a lot of different angles. And from a content perspective, like at some point you kind of just run out of media space. So for us, like, one, sports betting is super relevant, and two, we need more content to advertise. So about 8 months ago, the goal was, can we build a newsletter audience that maybe is a little bit older, interested in sports, maybe they've gambled, maybe they haven't, but with the ultimate goal down the road, you know, can we have another place for brands and some of our partners to market their products to our consumers? So we're on Substack for like the first 4 months. So like, I think we made the switch back in January, and we've grown pretty quickly since then. I mean, the interface is better. I think the team and the customer service is better. And obviously referring people is a big part of it. So to date, we're almost at 13,000 subscribers. We have a pretty healthy open rate, and there's a lot coming for us down the road. So that's kind of my quick intro. And Jack is here, I believe, as well, who also works at Overtime. If Jack wants to say something or add anything in, feel free to hop in.
What's up? I'm Jack. I'm on the Bracket X account, which is one of Overtime's Web3 NFT projects that has, I wouldn't call it gambling because my lawyers would be mad at me, but like skill-based gaming elements using NFTs. Justin covered Overtime well, so I won't go deep, but just wanted to introduce myself to everyone.
What's up? Cool. So, I mean, there's so many different ways we can go with this. I'm being told AJ has some limited time, and because this is a sports and gambling Twitter space, although we don't tell the lawyers gambling, let's talk some NBA finals to get started, and then we can dive into the newsletter stuff. Wolf, you want to take it?
Yeah, absolutely. So, AJ, were you at the game, the last game?
No, I watched it here at home in Atlanta, but I'm actually leaving tomorrow to go to Game 3 in Boston.
Okay, perfect. So, AJ, when I met you, you were with Quentin. So for anyone that wasn't in the space earlier, AJ's cousin's with Jaylen Brown. So obviously a big Celtics fan. I'm sure you guys, have gone to a lot of Celtics games in the past and everything along those lines. I would love to hear your thoughts on right now, kind of the lead up to the Celtics actually being in the NBA Finals. Obviously, you had a lot of conversations with Jaylen throughout the year. Did they see this coming? What was the mentality and the mindset? And now that they're at a split series, have you had a chance to talk with him? And what's the mindset right now on the Celtics?
It's hard to really get in the mindset with me not being on the team. But all I can say is I know how Jaylen approaches, especially in the playoffs. He tries to stay limited on social media, not really talking about the game as much because for him it's just like an extra season. And he's really trying to accomplish something that many guys from where we from can't do, and that's win an NBA Finals. But I'll say this, people don't remember it was a time I believe Kyrie was out and you had a second-year Jaylen Brown and a rookie Jason Tatum, and I believe they had the Cavs up 3-1 in the Eastern Conference Finals when they had LeBron James, and they lost that series and the Cavs ended up going to the finals. But you could see early that they had some special going, and just to see them guys put it together this year, I know there was a lot of questions about how they'll mesh together. And you can see it's a good series. Both are great teams. They have scorers that can have a great night any night. So I'm sure if anybody's in here gambling, it's kind of tough to see who's going to be the for sure winner. You want to show some biasness, but I believe this series could go Game 6, Game 7, and I'm definitely excited for it.
I love it. So, Tyler, got a comment there?
No, I was just going to say, curious with like Justin and Overtime and their relation with the NBA and even just the focus of the newsletter. Like, how are you guys covering the NBA Finals? Anything if you just want to touch on like the content strategy there, I think it'd be interesting to hit on.
Yeah, totally. I mean, I think like gambling, there's so many, I mean, I won't call it traditional gambling, but like, the stories around gambling, like there's 100 different routes you can take. And from like a company perspective, we're obviously like doing what we can from like a content rights perspective on social, but the newsletter gives us another platform to kind of like do whatever we want. I say like hesitantly, but I'll use like tomorrow, for example, we're going to write about Game 3. Like the lines have already switched after every game. Like they've switched from Warriors were the favorite, then the Celtics, then the Warriors, and now it's back to Boston. And like just that line flop is like a story within itself, and that has nothing to do with like getting into the specifics of players and anything that AJ just mentioned about like Jaylen or Draymond, who's obviously been like super relevant today. So I think like the gambling aspect is super interesting because like you can just write about the lines themselves, and that's a story without even getting into any like player specifics or strategies. So there's really like endless routes that you can go. And I think from us on like a young newsletter side, it's just like playing around with it and almost like curating the content to be like, what is the most clickable for us? So, I don't have a necessary answer of like what our strategy is, but we're definitely trying to make sure that we're like staying up to date on everything that's relevant as like the series flips back to Boston. Yeah.
Liam, what's Front Office Sports doing with respect to the gambling angle?
So I think we take a little bit of a different approach to it, seeing as we kind of like tackle this entire industry more from a business angle. So like one of the areas that I think that we look at that's been interesting is kind of how some of the broadcasts go with this. We're not really seeing like a simulcast or secondary cast that's got like a huge gambling skew towards it with the NBA yet, which is interesting and something that we're kind of like following as we go. Because again, we kind of cover it more from like a regulatory standpoint and how some of the bigger broadcasters do coverage. And it's interesting how like it is such a huge storyline. Like I know that I think Simmons swung the like Tatum assist over under for game 2 just by talking about it on the pod. But that's right.
He
like
definitely did.
Yeah,
Definitely did.
Yeah, right. And that's like the type of stuff that you're getting on some of the like secondary football broadcasts, but it hasn't really kind of trickled into the NBA as much yet, which is interesting. So like that's kind of the angle that we take with it a little bit more, less like focusing on the lines themselves, but kind of the more broad implications from a business standpoint of how some of that stuff looks like.
Hey, AJ, speaking to the gambling side of this, I was texting with Jerron the other day, and he took over on Al Horford points for game 2. Sadly, did not hit. But I think the concept here in looking at it is where does some of the hidden value lie? So I'm sure, you've watched this team a good amount and have some ideas. I can pull up lines on FanDuel. I don't know how much you can talk to, but who's the X factor here for you in this, on the Celtics team? Who comes up as maybe a couple people as X factors? And are there any people that you think might surprise in certain areas when it comes to, the betting public?
Like I said earlier, especially in this series, anybody could have a great night. And the X factor that I really see right now is Grant Williams. We seen what he did last series when he got to his spot, got the open shots, because we know where the eyes are going. They're going to Tatum and to Jaylen Brown, especially when they're driving. So they create open opportunities. But besides him, Marcus Smart, he's always been consistent on defense, but he has those games where he shows up offensively. We saw that in the first game of the series. And then finally, Robert Williams, just the presence he brings may not be points, but just on a defensive standpoint. It's a lot of guys you can watch. You saw what Jordan Poole did last game for the Warriors. People are still waiting for Klay Thompson to have, a magnificent game. We all heard of Game 5, Game 6 Klay. So there's definitely a lot of guys out there on the court, but those are pretty much the 5 that I'm looking forward to as far as X factors.
Love it. I think that Marcus Smart one is really interesting one, especially because he went 18 points game 1, 2 points game 2, and his line right now for series average is 12.5. Do you think he's going to be above that or below?
I think he's going to be above that. I've watched him a couple times, especially one thing about professional players, we play better at home. It's just that atmosphere, just the fan base behind us. It's just familiarity, and everything like that. So I always expect for guys to play their best at home. It's very rare that you see them have a down game.
Absolutely, yeah. Coming back to that stadium, but we'll see. Celtics have been great on the road, but if you're at home, it's been this back and forth. Yeah,
quick. I was going to say,
yeah,
quick shout out to Neil, Morning Brew's managing editor, for dropping by for the convo. Also, kind of a Boston sports fan. What's up, Neil? Oh. Pivoting back over to overtime. Now that we have the overview of overtime, the league, their goals and ambitions as a company, honing in a bit more on just even the odds. What's like the elevator pitch of the type of content that you're creating and like your ideal target customer or reader?
Yeah, no, it's a good question. I think for us, at least like in the early stages of the newsletter, we're actually going for a very like novice sports gambler, type of reader. And I think like right now, if you're subscribed to like almost like the two spectrums that I put it are like, Axios Sports and Kendall Baker, and then there's like your BetQLs. And for me, there's a lot of white space in between. I'll call Kendall, like, obviously he's a very good writer, and I would say a lot of it is summary of sports things that already happened, and then light preview on things that will happen. And then on the BetQL side, it's like, we have an algorithm, and 83% of our models say that the over is going to hit. A more like very intense gambling read, and then a very like high level sports read. And I think we're trying to play right in the middle of like hey, person that doesn't necessarily bet, like, here's something that's happening today. Here's the context. Oh, and here's the line, and here's how you could go make a bet. And then in the long run, like, can we monetize around sending those novice gamblers to places where they can actually place a bet? So that's kind of where we are right now in terms of like what our content is. I'd say if you're a very big sports fan, a lot of the times it might be, you might read something that you already know, but we're looking to play a little bit more in that, novice gambler intro to sports fan and try to convert them into ultimately, paying customers.
And the product itself right now, is Even the Odds operating kind of independently from the rest of Overtime, or like is there overlap from cross-selling and cross-promoting into the other offerings?
Yeah. We had a very long meeting today about how we can do more of that. So, we have a budget and we're playing around with things kind of outside of Overtime's realm, when we can get help from our social team on posting on our Instagram stories or on our main Twitter, like that's obviously, free media, but we're doing a lot of testing and learning outside of that. And then down the road, we have several different podcast shows internally, and we're going to think of ways in which we can connect the two. We have a very huge merchandise team. Like down the road, are we selling Even the Odds hats? So, there's ways that we can connect, massive, biggest picture. Like, do we ever have our own betting lines on Overtime Elite? And if so, that's a pretty obvious fit for like our newsletter. And then the other part of my job is we have our own sports app. So, we have daily fantasy games for NBA and NFL, and down the road, can we do that for Overtime Elite as well? And can we link all of that together through a newsletter? So there's a lot of opportunities, I'd say, in the early stages right now. We're playing around with some budget, and we're figuring out how we can intersect with other parts of the company.
Elliot, what's up?
How are we doing?
How's fantasy play in all of this in terms of your play and like both monetizing? Fantasy is like gambling somewhat and somewhat not. I guess like what's the content strategy? And if you want to give everyone a quick briefing of Matthew Berry's fantasy life, would love to hear it from you.
Yeah, absolutely. So Matthew Berry just got from Peter King yesterday. I voted, it's probably the wrong word, but he ranked him the 10th most influential person in all of football, which was cool. But Matthew's obviously the face of ESPN Fantasy and one of the industry leaders, and has been for quite a while. Built this newsletter up the last couple of years, and we're really taking everything to the next level. And to your point, fantasy gambling, they're both games of skill, and they're both gambling depending on how you approach them. My lawyers don't have any issues when I say those things, so I guess I'm off the hook there. But like the easiest way to convert a fantasy player to a sports bettor, in my opinion, and based on the research and the way we've executed, is through player props. Because it's a lot easier to try to say, hey, you have Patrick Mahomes on your team, and you think he's going to have a great game. Do you think he's going to throw over 2.5 touchdowns? And player props, you can really start to, tell stories, root for just individual players. And we know that spreads and totals are probably the hardest things to consistently beat. With that minus 110, you need to hit them about 52.4% of the time. So with player props, though, they tend to be much more beatable lines, especially if you're willing to go under, since public loves the over, and they tend to be a little inflated. That's one of the ways that PrizePicks has gotten such a strong user base, is by actually having slightly lower overs and knowing that people are going to look for all that stuff. But that, to me, that's a massive part of what we're going to do this year. Is we're putting a ton of betting content in everything, and I think player props are kind of the future. And I think one thing that's really interesting from a content creation standpoint, from someone who's trying to have engaged users but also give them value, is that a lot of the way that people like to sports bet is probably the worst way you can sports bet, right? If you look at Bleacher Report betting or any of these massive things, they're always tweeting out someone who took, 8 first basket parlays, first basket and turned into a parlay, and they turned $5 into 800,000. They want you to do that. They want you to play those lottery games instead of actually significantly grinding out for everything. And I know I'm not the host, so I don't know if I get to ask AJ a question, but I think one thing that's interesting, and I'm not trying to Calvin Ridley you, but with sports betting becoming so big and so prevalent, and player props coming everywhere, obviously you're a defensive player and they tend to have less player props, but Are people aware of different lines, or do players feel offended? Like, if I'm Brandon Cooks and my line's 48.5, I'm like, what am I doing? You know what I mean? Like, I'm just curious if that's something that even gets talked about, and not from a you guys are betting on it perspective, but just from a like motivational perspective.
I can't speak for the offense, but I will say they probably do get a little motivated because as professional athletes, especially in the NFL, we take pride to anything. We use anything as motivation. And I don't know, I'm not familiar with the game.
You got cut off for me for a second there.
Sorry about that. I had a call coming through. But yeah, I don't know much about how everything goes as far as the betting. I don't know if it comes out hours before the game starts, but usually when we prepare, we're not really allowed to be on our phones before games. So we don't really pay attention to that thing. If it's earlier in the week, some guys might see it, but for defensive players, I really can't say much because we don't pay attention to that. But I will say earlier we used to, when we had night games and we're watching on Sunday and they're having their picks for who's going to have a good game, how many yards, we take offense to that. So I could, it's probably a 95% chance that some offensive players might look at that and take some motivation from that.
Well, I think you could say even from the offense players, let's say they're supposed to have a bunch of yards, and you're like, that's the guy I'm covering. And you're like, he's not getting over here. No.
Right. That's what I'm saying. For us, I just know how we prepare. We don't try to pay attention to the gambling part of it, but the only time we really see something as far as a stat or projection is if it's on ESPN, but we don't really watch ESPN before the game. So
yeah, that's pretty fair. Dude, they have these lines up like 3 months in advance nowadays. It's a little ridiculous. Yeah. Like everything's so talked about. I mean, all these lines are up, like you could bet, but for player specific props, it's usually that week that it'll come out. So usually, like, I would say you could probably bet player props. Probably, let's say games on Sunday. Probably Monday player props are up for the next week. Maybe Tuesday latest.
Also, for the record, no real agenda here. So, Elliot, when you have questions for other people, we have a pretty all-star lineup of people involved with sports media and athletes and everything else here. So feel free just to ask whoever, whatever. Keep the conversation going.
Fantastic. I appreciate you. I just,
no, you got it.
This with you guys, so just trying to make sure I'm not overstepping. But yeah, AJ, that makes a ton of sense from that perspective. I think Wednesday, Thursday they come out, and you're just seeing them on ESPN and all these different sports. They're starting to come up on the bottom line and everything. And I think it's just going to be more and more involved with the game to the point where it's hard to get away from it.
Yes, I definitely agree with that. And then my question is, will athletes ever get involved with that, or is that frowned upon for us in the future?
Well, I think it depends on the sport, right? So I think UFC is a great example where every fighter comes out and starts talking about it. Eric Anders, the linebacker from Alabama who now fights in the UFC, literally came out and said, I'm putting my $20,000 check on me to win. Now, he lost, which was a double whammy. But I think that, what we're seeing more and more is players are being allowed to bet outside of their sport, and they don't want to touch the individual sport, obviously in terms of the sanctity of the game. But, there's the question, in my opinion, is like, where's the line drawn? Because I know football players are allowed to be in fantasy leagues. Players talk about it all the time. I think Dawson Knox ran up to someone last year and like, you're on my fantasy team, man. I appreciate you. Like I think it's really interesting the lines that get drawn and where it is and what you're allowed to do. But I think there's going to be more and more gray areas that athletes are approached with because it's easier and easier to do it. In every state that comes online, it's advertised so heavily that it's hard to get away from.
Right. And the NFL, they do a good job, especially at the beginning of camp before the season starts. They let us know, as far as gambling, they let us know, like you said, with the fantasy leagues, the certain leagues we're allowed to get in. It's only a certain amount of pot or the maximum pot that we're allowed to be in when it comes to these fantasy leagues. They still inform us it's not good to gamble through DraftKings or anything, but the only thing we're able to do is those friendly fantasy leagues. And I think it's a maximum of a $500 pot or something like that. I don't remember. It was a while ago.
Speaking of advertising, watch this transition. So something that we were talking about yesterday with the Even the Odds squad in overtime just like long-term plays for the newsletter, being able to monetize. I'm sure Elliot can relate, same with Front Office Sports and Liam and that squad. But as far as like having a newsletter, monetizing it and scaling it, advertising is pretty tried and true way to do that. We are fortunate enough to have Brian from Bullish up here. Curious, like what you've seen in the advertising space and newsletters, and especially as it pertains to sports media and gambling.
Yeah, for sure. Thanks, Tyler, and thanks everybody for a great conversation here about all the sports media and gambling stuff. I've enjoyed it. Yeah, Tyler, to your point, I think the opportunities for monetizing newsletters it's pretty simple. It's been around for a while. I think you obviously have the free email newsletters that you can run advertising in and find sponsors to pay for a placement in them, or you can create a subscription, a paid subscription model that a lot of people are leveraging Beehive for as well. But yeah, I think at the end of the day, email newsletter advertising has been around since basically the birth of email, and it's been around for a while. It's one of the highest ROI, media advertising units that a brand can run. So I think it can tend to be a really steady, consistent source of revenue for an email newsletter writer, especially if you have an engaged audience and the brands are a good fit, because ultimately you're just helping them drive more users into their platform. So as long as you're doing that, they'll keep spending. Obviously, you want to try to always find partners that are long-term in nature and aren't going to, do anything or run any copy that kind of ever misguides the audience. But yeah, the opportunities, especially in sports and sports betting, are endless. I mean, you've got every single, depending on what state you're in, and the levels of the sports books advertising from the FanDuels, DraftKings, and Caesars their pockets are deep and they're always trying to find new users. So I think it's a really strong way to monetize newsletters. So yeah, happy to elaborate further.
Yeah, would love to get the group of sports newsletters involved in maybe almost like a Q&A to learn from you and kind of what you've seen in this space. Justin, right now you guys aren't monetizing even the odds yet, right?
No, we're not. And I think we asked you this yesterday, but I'd love to hear it from this group. Is there a minimum number of subscribers that you think are needed to begin to start monetizing?
No,
I have thoughts, but Brian, you, because you're the expert here.
None. No. Because at the end of the day, it all depends on the quality of the audience. I think just being able to you can go right now and get yourself an affiliate only deal for any brand and start to run them and just see how well they run, how well certain brands or certain, ads react to your audience. But, we have some newsletters that have 5,000 subscribers on them that are making $1,000 to $5,000 a send because that audience is extremely influential and we're matching them with brands that ultimately fit, right? Especially as you get into sports betting and other types of high-end financial services and luxury products. These are brands that are still running banner ads on GQ.com, right? So there's a lot of opportunity depending on your niche and the quality of the audience. But I would say start the conversation sooner than later with the brand so you understand what their goals are and you can kind of map up to see what your audience wants. Definitely run audience surveys, get a sense for what your audience wants to see from you and what types of companies and projects and things that they're excited about, just so you can then take that information back to the brand so you can further evangelize your audience.
Yeah, that's all super helpful. I think the question that I was thinking about today is how do you start to gather that information from your audience? Because I think now that I'm at around 13,000, it's almost like an intimidating task to start to try to move your core readership into another platform to have more one-on-one conversations, think Discord. But is it literally just asking questions and linking them in your newsletter, or do you recommend trying to take that newsletter audience and move them not necessarily off of Beehive, but in a setting where it's more natural to have a one-on-one conversation or a 1 to 20 conversation rather than just pumping out one email a day?
Yeah, to be honest, I wouldn't overthink it. I think you could use something as simple as a Google form with just a bunch of different questions that essentially ask your audience how old they are, where they're from, what they care about, why they like you, how long they've subscribed for, all that. To the extent that you can incentivize that with like, hey, we're going to be we're going to be hopping on the phone or, having one-on-ones with a handful of the respondents. So if you want to ultimately get access to us, you can dangle that over as a way to incentivize people to fill the form out. But I would definitely say you always want to have one-on-one conversations with your audience, no matter what, right? Depending on if it's, one a week, one a month, or, a handful, and like you always check in. It's always good to see that, to have that like just general anecdotal information. But using a Google form is a good habit. And then, every 10, 15, 20, 30,000 subs as you're growing, just keep polling them and, evolve the questions, but don't overthink it. And just, a quick Google survey, I think is great.
Yeah, I'd like to echo that. Just, I think that the information that you need to gather in order to be able to sell advertisers can be accomplished through kind of like a Google form or any type of survey data, because they really kind of want just like a demographic understanding and like a true persona of who those people are. Porting it over into kind of a more one-on-one, kind of what you were describing, like a more intimate setting, whatever, is hard, but it is useful too for kind of more like product evolution. Less so, I think, gathering kind of what the information is required to be able to sell to advertisers.
Also, for what it's worth, when we were at Morning Brew, and I don't know if it's changed because it's been 2+ years since I've been there, but we would send a Survey Monkey like quarterly. Obviously, there's survey bias involved in all of that. And whatever data we would aggregate there, we would package up and sell that to advertisers. So I would caveat with like it's not an exact science in terms of understanding your audience. Also, shameless plug, Beehive's about to launch a polling feature later this week, early next week, where you can ask questions and aggregate results about your audience, kind of like a Instagram story polls meets email. So hopefully that lowers the barriers to collect additional information. So a little preview there.
Hey, I'm going to hop in real quick for a second after Tyler, just putting a pin in another one, although I'm fascinated. And Brian, we definitely got to chat more about this monetizing newsletter audience thing. With that being said, I want to just take a second to really thank Beehive for making this space possible. Met a ton of really cool people in this space, having Liam and Elliot and Dill and Bullish and others that are up here. Of course, evening the odds with Overtime and Neil Freeman, who was up here, and my friend AJ. A really great crew coming together to talk about some fascinating topics. And we do this every single week with the Beehive team. We find another person who's really making headway in this world of writing and emails and bring them on and really learn about their story and learn from them as to, how more people can get involved in this. But it all comes back to Beehive. And the reason why we're all using Beehive is simple. It's scalable, it's native, it's data and analytically focused. And for me, the biggest thing is my emails stop going to people's spam. They go through the actual inbox. So I'm just saying, listen, that worked really for me. I switched over to Beehive this past week. My open rate went up 13%. Take that as you will. My click rate doubled. Just saying. But in reality, there's a ton of incredible features that are going on inside of here. And the best part is you get to hear about it right from the CEO, Tyler, who's right up here, as well as Iman, who really does a ton of stuff at Beehive. And it's not really behind the scenes. She is the front of the scenes. So to have the two of them on here talking about this with obviously some great newsletters. I know for myself right now, it's myself, Even the Odds. We've had on Jack Rains, Liquidity, Ramp Capital. We've had on Tyler, blanking on the last name, but we talked about, I think it was Steinbart. We talked about, we talked about the environment. There's a real breadth of knowledge being, departed here. So what I'll say is if you're in the audience, first off, you've probably been listening to this conversation. You're like, maybe I have a few thousand, email subs. I've never thought about monetizing or how I could really grow so fast. Beehive is a great place for you to do this. You can directly do it through it. You can see the accounts up here. There's pinned tweets up top laying out what I'm saying. And then number two, if you're somebody that's looking to discover new newsletters to read, this is a great place to go as well. You can go and check out the Even the Odds newsletter right through the link that's in their bio. But of course, you can go ahead and go into right into the Beehive account, and you can see they retweet stuff from all the people that are writing newsletters on this platform. So if you have under 2,500, it's completely free to use. So, if you're writing right now, it's 1,000 people and you're like, yeah, I could really use a platform that's actually going to take care of me. And also you can embed right into Twitter. So I have my Beehive right into my bio. You can see it's like a one-click sub. So obviously I have a large account on Twitter that makes it really helpful for me to go ahead and get more subs every single day. These are just a couple of the different pieces as to why I personally, and I took my time, took my months, did my due diligence, looked into it. It was, I thought it was going to be harder, honestly, to move over than it was. It was pretty easy. And then I moved over. Now here we are. So that's what I'll say. And really, really big shout out to Beehive and everything that they're doing to bring us together and make this space possible. If you have any questions, just shoot them over to Tyler and Iman. I'm sure they'll get back to you pretty fast.
Tyler, anything you want to add on to that before we keep it rolling?
Not really. That was a great overview of everything, and I feel like there's so many great people up in this space to talk sports and monetization and newsletters. I kind of want to shift the conversation, but we'll summarize with, if you have a newsletter, definitely check out Beehive. Shoot me a follow. We promote all of our updates. It's free to sign up and poke around. And many of the content creators, most of the content creators up here are currently on Beehive. So with that, I actually kind of want to jump back into the monetization angle and take advantage of Brian from Bullish being here. Also, maybe Elliot and the fantasy life. Obviously, with fantasy sports, the amount of advertisers that would be interested in getting in front of that audience seems plentiful. Kind of curious. I think previously you've been doing mostly merch, but as far as like long-term monetization strategies, how are you thinking about it?
Yeah, absolutely. So, like you said, the space is huge right now, and it's threefold. There's the fantasy aspect, there's the DFS aspect, which is really your prize picks, and they're mostly player prop betting games that they just didn't want to get the betting licenses. And then it's obviously there's an arms race for sportsbooks, whether it's FanDuel, DraftKings, Caesars, MGM. They're all spending a ton of money right now, which requires a massive licensing process. If anyone wants to learn more about that, feel free to reach out to me, and I can walk you through some of that stuff. But the monetization process is pretty phenomenal. And the other aspect is you get major brands that want to align yourself with that kind of audience, and the fantasy audience, the FSGA's, which is came out with a report like a year ago about how the fantasy audience actually engages with products at a higher rate, basically across every single product than any other platform. So we view ourselves as having an incredible audience. Jordan, who's our director of content, is also on this call right now and has done a fantastic job with our content. We've really kind of grown through Beehive. I just want to echo what was just said about how amazing the platform is. And we have an incredibly engaged audience. We're trying to build out our different media platforms and create as many super users as possible, which start to help influence the other users. And it just kind of starts building and building and building and building. But there's a lot of different aspects, whether it's straight ad buys, whether there's rev share opportunities that these companies are offering. When someone asked before, like, how big does the newsletter need to be? You can start talking to them about CPA deals, and if you show an audience, you can have a rev share deal where you can literally just start making money as your people play on these platforms. And CPAs are I forget who made the point before, but there's basically not a company in the space who won't give you a CPA because it's risk-free marketing for them. And for depending on the site, for DFS, you're probably looking at between 75 and 150 per new customer, and for sports betting, you're probably looking at anywhere between 200 and 600 depending on the state and the sports book. So there's a massive opportunity to monetize very, very quickly. And one other point I wanted to make real quick is that we picked Beehive not just because of the platform, but because the people involved in it and the community that it's building and how much it supports content creators. And that's a huge aspect of what we want to do as well. So if anyone is interested in potentially trading different parts of advertising where you can send some of your audience to us and we'll try to do the same for you, please feel free to reach out to me, Elliot at FantasyLife 1L1T, or you can follow me on Twitter. That's probably the easier way to do it. But we're happy to help support everyone as well. And that's one of our goals too, is to try to ingrain ourselves in the community and have people want to support us. And the more names that get attached to us, obviously we have the biggest one in the industry, Matthew Berry, but we just wrote up like a guy named Scott Fish the other day, who's considered one of the best people in the industry and has a massive fantasy platform called the Scott Fish Bowl, which is the biggest fantasy football league in the world. He does it for charity, and we just featured him in our newsletter. And now Scott Fish is one of our biggest allies and supporters. So one of the things we try to do as well is capture other people's audience by supporting them, and we think that will help us grow incredibly quickly, and then turn it right into an audience that we can monetize through CPAs, rev shares, and straight ad buys.
I think that's pretty relevant to some of the conversation that we had yesterday with the Overtime team. Justin, you said that you mentioned you're at 13,000 subscribers-ish right now. You want to talk about how you got that growth, what's working well for you, and then like where you're looking to experiment in the future?
Yeah, totally. I mean, I think everything Elliot just said is pretty relevant to that follow-up email I just shot you. So I appreciate that sentiment, Elliot. You'll definitely hear from me. at first we were definitely doing like your pretty standard, like, we'll pay you X dollars for X amount of placements for some smaller, fantasy newsletters. We were doing a lot of like leveraging our own social handles, but I think the general Overtime audience is a little too like young, I want to say, to like be our target newsletter consumer. And then as we've like saw some growth, I'd say our biggest growth came from we did a collab with a college bookstore, which had an email list of like 1,000 emails, and we had them segment, a certain consumer, and we gave a jersey away to one person who subscribed. So that was like our biggest growth plan that got us from like 2,000 to like 6,000. And the first 2,000 were obviously a grind. And then since we've gotten, closer to 10K, we started running some ads on social. Like you're pretty basic, like it's the NBA playoffs, email capture ads, and then we pump them back into the Beehive platform. And that's just been like our consistent method of growth. We only started like a Twitter handle a few weeks ago. So we're like being hacky around that too. We'll give $100 away to anyone who follows us and, retweets this if Steph Curry scores 30 points, like things like that. So we're trying to hack the system a little bit, which is a little easier if you have like a company like Overtime behind you where you have some budget to play around with. But I think like being on Beehive and now getting to meet, some of the other bigger players that are on your platform, it'll be fun to see if we can move some of our audience different places and grow in that sense. And then obviously trying to double down on Twitter. So we actually just went through the newsletter Twitter integration today. So our newsletter is now officially linked to our Twitter bio, which is awesome. And then like, I think big picture for us, what we're trying to do is I have this vision of almost like the Axios local program. If you're in New York and you subscribe to Axios New York, you get Axios, you get New York news. I kind of want to do that for whether it's college football, college conferences or specific schools. I would love to grow our list to a large number and then segment it based on where some of these ideal college students live or go to school, and then start to write newsletters that are curated to like their conference or their athletic program. And I think that's a great way to monetize like location specific, because you obviously like know who you're writing about and where they live. So that's kind of a spiel of like how we got here and what we're looking to do going forward. But I think again, like the newsletter space is interesting because like there's not necessarily like a blueprint that you follow, which I think is both like hard but also a good thing because you get to try and learn. So that's kind of where we are 6 months in.
Just going to hop in here really quick. So something I really like, just a little shout out for your current newsletter, is I like that all the content is under like a 5-minute read, extremely digestible and just like easy to navigate. Is there a reason that you guys decided to take that approach with your writing, and any like challenges that you guys have faced like in creating your newsletter in general?
Yeah, I think the under 5 minutes is like, honestly, I subscribe to a shitload of newsletters, and I found that the quicker reads were just like, I was actually reading them every day. So that's kind of, it was more of just like intuitive of, I think there's a lot of long form content out there and we wanted to be short. And one, like, because we're that intro to sports betting kind of consumer, I think under 5 minutes is like kind of the most you'll get. But then from like a difficulty perspective, I think these next like 2 months will be really interesting. Like the NHL playoffs are winding down. The NBA playoffs are winding down. I don't know much about golf, but like I'm trying to find a golf writer to help me with that. We're going to have to be writing about like random international soccer friendlies and like non-major tennis tournaments. So like, we'll see how the next 2 weeks go. There's like NASCAR and things that I need to educate myself on from like a newsletter perspective. But I think the next 2 weeks will be interesting just with like the dead time of summer and no sports. And I'm curious if anyone else here that runs a sports newsletter has any insight or suggestions on how they've handled that in the past.
Football future
Cut off a little bit there, Elliot.
Dead period. I mean, baseball just doesn't. My apologies. I was saying that football futures are a massive market, and that's something that I would look to attack. They're going to drop a lot of player props here soon, but you could do like a 32 team in 32 days. Not necessarily. I don't know if Jordan wants me to give out every single content idea in the world, but football futures in general are a massive market, and you'll see them start to really leak out here. Like last year, Tim Tebow, when he signed with the Jaguars, they put out Tim Tebow over under 11.5 yards, and that content blew up. So football is always king. I think they showed the other day what the Warriors had 8.1 million viewers, and the lowest playoff game for the NFL had 24.3. Sometimes the niche sports definitely, it's a much smaller audience, and football will always be key. And the closer we get, once we pass July 4th, that's what everyone's gearing up for anyway.
Liam, any thoughts? If you're still there.
Yeah, I'm still here. I think the football futures bet is a good piece of advice. The other one is just kind of like you do have to just hustle and like learn some of those markets to be able to write about them. I know that we had one of our writers, Doug Greenberg, who covered a bunch of that stuff in the kind of dog days of summer last year, and a lot of it was kind of like getting up to speed on those, especially like international soccer markets and everything. People have gained like more of an appetite to go into some of that weirder sports stuff, particularly given the pandemic and like the boom of betting on Korean baseball, etc. So I think it's just kind of like legwork that you're going to have to do.
Curious, Justin, with even the odds, just like operationally speaking, what's it look like? I know you initially, when you launched, you were the one writing the newsletter. Now I think you have freelancers. Just knowing the audience and a lot of people's interest in newsletters might be interesting to share, just kind of operationally how you're thinking about getting the content out week to week.
I wrote the first like 60 issues, which was tiring. And like for us, it was just trying to find like what our voice is and what, going back to like what we were talking about before, like what our length is and our cadence and all that stuff. And then once we had a sense of it and I felt like I could teach it to someone, we have a pretty big freelance network at Overtime. We have a sports app that is like kind of run by myself as well, but it's like all freelance work. So we were able to pull from that pool of like, I have about like 30 freelancers. And I was able to like figure out which one of them have long form, experience, and then teach them kind of the voice that we want to use and the cadence that we're following and all that stuff. So I think it was hard, but I definitely was happy that I wrote the first number that I did, just because then I had an idea of what we were trying to mimic when we would bring on new people. But again, I think, we were talking about yesterday, Tyler, like the thing we're currently missing is like, that sports personality that also writes a newsletter. Like at Overtime, we're very personality driven. We have a lot of characters who kind of help drive our business goals. But none of them are sitting down and spending, 2 to 4 hours writing a newsletter. So I think going forward, what we're trying to think about is like how we can have our own content arm of our newsletter. Ideally from someone who is either big or, or we put some money behind them to help them grow, and then figure out how that like helps our overall goals, if that makes sense.
What surprised you the most about running and scaling a newsletter?
The first 5,000 for us was like a huge grind. Like I would say the hardest part for me was like writing it and then looking at the number of people reading it and like the number growing by like 3 to 4 for like, multiple days in a row. And that was tough. And I think since obviously there's a little bit more juice behind what we're doing. But like just grinding them out when you don't have that many people looking at it, I think like was probably the hardest part for me. Especially like when you're at a massive company like Overtime and like everything else is crushing it and you're writing a newsletter that isn't necessarily crushing it, not to sound so pessimistic, but like that was a hard point. And then for now, now it's growing. I think the hardest thing is just like, we're a small team on our, newsletter front. So juggling all the different like test verticals that we're trying to do is just hard. And there's only so many things we can try at once and like keep track and learn from. So a lot of things that were harder 3 months ago, and now we're starting to get the hang of it. But we had also, never played in editorial space from Overtime. So it's not like there was much of a blueprint to follow. So it's been fun trying to like become the expert within Overtime.
I'm sure there's a bunch of conflicting priorities and company politics and whatnot, but curious like the strategy and leaning into the broader Overtime ecosystem. So Instagram's at 6.4 million followers. Twitter's fairly large as well, and I'm sure you're active on TikTok. I guess just like what it looks like to get a plug from like an Instagram story to subscribe to the newsletter, or just like being able to tap into just the massive ecosystem that Overtime has created. Curious to understand that a bit more.
Yeah, I mean, our content operations team is massive. Like, we obviously are a business because we have a following and we work with brands and we sell ad space. And they're insanely organized and they're booked up weeks, months in advance. And sometimes it just takes like a little bit of luck of like, yeah, we actually have something like available at 5 p.m., but it's literally just asking if there's space, getting lucky, sending assets, like seeing how it does. But for the most part, it's rather difficult to use our organic reach, which I think makes sense. Like, at the same time, we are trying to build a different audience. So while like, yes, it helps our numbers if we can move 1,000 Instagram followers over to our newsletter, they're technically, we're not growing in that sense. Like we are, but we're not. So that's why the Facebook ads have been helpful. We're like getting a brand new consumer who, is showing interest from an ad and then reading our content rather than like signing up for something on Instagram that they're not really sure of from an account that they already follow. So definitely some politics. We're definitely like getting better at it. But ultimately, like, I think our goal is to grow a different set of readers outside of our Instagram or Twitter followers.
Real quick, Liam, if you want to give some insight into front office sports, their operations, I think you have a bunch of different newsletters. So kind of curious to hear how you guys are operating over there as well.
Yeah, so we kind of went through a period of growing a bunch of different verticals and then consolidating again. So last year, I think we had around 5 separate properties that we were running. That's been consolidated down to 2 now, which is just front office sports writ large, which is kind of the business coverage side. And then another one that we call Scoreboard, which is a little bit more of your kind of consumer sports based newsletter. I think from that aspect, like we've transitioned into a little bit more of a multimedia platform over the past 6 months. Just we have like separate kind of site stories that we run, have been building across different social verticals as well. So kind of thinking about it, taking a different approach. But I will say that it becomes difficult to be able to, like, back to the kind of advertising model that we were talking about before, it becomes a little bit difficult to sell to advertisers when you just have a disparate set of readerships because they are technically different properties and you're not selling the same ad slots. So in the event that you reach a certain amount of scale, we're big enough where we're close to like 1 million readers now. So it's kind of like a decision that you have to make if it's worth breaking those up into such specific verticals or if you kind of want to have it fall under the same umbrella. So that's a little bit of a like business model selection there. And we opted to go for a little bit more consolidated. So I guess that's just like a quick insight into the way that we looked at it.
That makes sense. I kind of love that everyone can kind of just say what's worked and what hasn't worked and bounce ideas off of one another. On that note, Justin, one last question that we like to ask all of our creators is if you have any advice for other creators, users that are like new to the newsletter space or just started a newsletter.
Hey, sorry. Yeah, I think honestly, like, basically, like, I mean, I'm trying to think of like the right way to phrase this, but like for us, I would say we spent a lot of time before we even started the newsletter, like doing research and figuring out where we can position ourselves with like what's already out there. Because while I will say like newsletters are still like up and coming, like there's hundreds of thousands, obviously. So I would say like if you can figure out what you want to write about and what other people are already doing and how you can be different from them, it'll just make the entire growth process easier. And then obviously like testing and learning, like, who would have thought like a college bookstore would be our most successful campaign that we run so far, but like thinking outside the box, figuring out how to quickly tell if something's working or not, and then doubling down on what is. I think a lot of that is a little bit obvious too, but like the biggest part is just like actually trying it. And I know that sounds like cliche, but it's very easy to throw out ideas and it's very hard to like actually try and execute them. So that's my advice. Just be ready to like be in the weeds for a long time until you find something that hits, and then you're at a number that you're comfortable with.
Awesome. All right. I love the conversation. Would love to cover it. Love talking sports. I know this crowd. I screenshotted it. I see who everybody is. I'm going to invite you all back onto my next sports spaces because I want to be doing more of these. I do have a hard stop right now. I have to go host a space about market and sentiment and analysis on a different account. So the Bullish Rippers account, the account will be in there as a co-host. This was incredible. One more time, if you are at all interested in building up an email newsletter list, and as you understand, there's so many different topics you can write about, just get started. Beehive is the place to start. You can see Tyler Denk, CEO, in here, Iman on the team, and the Beehive account. I just switched over to Beehive last week. I recommend you do too. If you're under 2,500 subs, it's completely free as well to use, and you can get a full suite of tools. I love the analytical emails I'm getting. Everything is moving up. I have almost a 50% open rate on Beehive, which I'm pretty excited about. So yeah, a lot of stuff going good there. Tyler, I'll give you last word here, and then we're going to close this one out.
Yeah, appreciate everyone coming to check it out. Shout out to everyone we had come as a speaker. Even the odds, highly recommend. We have a pinned tweet at the top. Go check it out. Subscribe. It's great content. Thank you, Justin, for joining. Same with Elliot and Liam. If you have a newsletter, shoot me a follow. Shoot Beehive a follow. It's free to get started. And we do these every Wednesday where we highlight a different content creator that's crushing it with their newsletter. So this has been great, and appreciate everyone coming out.
Thank you. All right, all. That's going to be it for tonight. If you want to hear about